The Podical sound.
Podcast, you can't win. Talking a good game, you can't win. Topics never lame, you can't win. Win.
Not your average Joseph. Marvelous.
It's ridiculously funny.
Welcome back to the best no judgment zone space in the world, because neither one of us have any law degrees. I'm Marvelous.
And I'm not your average Joseph.
And we are the Podical Sons. Let's start the show. We got a guest in the building, Mr. Carey Escoffery. How you doing today?
Doing well. Thanks for having me, guys. Looking forward to doing this.
Yes, man. Bless the people with your wealth, health, and happiness and stuff. How's the mental doing?
Man, I mean, probably like everybody else, right? You know, kind of dealing with the pandemic, the shutdowns. 2020 was particularly difficult for everyone, but we're surviving.
That's what's up.
That's
what's up, man. Yeah, man. I just feel like, we thought we would help the peoples with the masses and the information to get the money up, because everybody's worrying about the money's going down.
Sure.
Right.
Son, you would be the best person in our world to kind of inspire and help the people and motivate them across the world. So,
and plus, we don't know when that next stimulus check might hit, and we don't want y'all just running off and buying Nikes and clothes and
dead king crabs.
Yeah. So hopefully this will help you out, kind of figure out what your next move might be, and help you plan for the future.
Yes, most definitely, because I feel like a lot of times, a lot of people, especially with our community, we tend to get our advice from the musicians and the entertainers.
Sure.
And my philosophy and stuff is, you want to learn how to fly a plane, you got to talk to a pilot.
Yeah.
You can't ask a chef how to fly a plane.
Yep.
But a lot of times when they get that half-ass information and stuff, whatever, then that's it. So we'll get into that dance. So let's talk about these questions of the week, and then we'll get into the meat and potatoes
Questions
of the dance.
week.
So yes, folks, like, comment, subscribe. Catch us out on YouTube, SoundCloud, Spotify, all the audio plugs necessary, iHeartRadio. We are here. Let's go. Smooth.
Yes.
Could you marry a partner who slept with over 50 people?
I think I can. I mean, if she
You
don't
got
tell me,
slut-shaming?
if she don't tell me that she slept with 50
Here
people.
you go.
But I
with
told you
this.
before, I don't need to know. I'm not asking any type of questions for you to have to divulge that information.
Right.
I feel like the stupider I am to that point of view, the better.
How about you, Carey?
Man, to your point, Smooth, I mean, I don't ask that question up front.
Yeah.
Right?
Yeah.
So you ask it later?
No. It's one of those things. Like, I can think back to my past. Especially when you're younger, that's a huge concern. It may be something that you actually preface up front.
Right.
It doesn't seem like a question that you necessarily ask now, but there's always the potential that it's something that kind of creeps up and makes itself, be something you become aware to.
Yeah.
Don't think I could do it up front if I had that knowledge up front.
Yeah.
Really?
But at the same time, it's not a question that I'm asking up front.
Got it.
So
okay, let's say, for example, you're in a hypothetical relationship for like a year.
Yeah.
You're Gucci with that year going past and you're not knowing nothing.
yeah, man, I think, at that point where you're evaluating is the person and who they are to you,
Okay.
right?
Which is a good thing. It's just that for us as men, I feel like the average man and stuff, whatever, they tend to, I don't want to say slut shame, but they look at it as a word. Some dudes would be out here putting numbers on the board.
For sure.
Yeah.
But then when the women are putting numbers on the board, they're like, nah. One dude commented to me and said, no matter how many women he can sleep with, his dick won't stretch. But he said vagina will stretch. So I said, yeah, but you underestimate the power of a Kegel.
There you go.
So I mean, when it comes to the Kegel dance and stuff, how do you know?
Damn,
right?
she might have been Kegeling since the last 2 years, and you probably think you're the number one.
You forget online they had the yoni eggs?
The yoni eggs.
And then they had the little cooch steamer thing, whatever. So they should be it's good.
Like a brand new car.
I mean, but going back to what I'm saying though, it's one of those things where, like, if you have that information up front, it would probably taint the opportunity to get to know that person. You know what I mean? So
Would it though? Because she's a professional now.
Yeah, for
she
me,
know what she's doing with the dick.
If I knew it up front, it's kind of like it would probably be, I probably wouldn't do anything after that point.
Right.
So it's one of those things where, if you don't know, what you don't know doesn't
Won't
hurt you.
Yeah.
Right?
Yeah.
And I think that's kind of the line that you were going along.
So there's a lot of Mario Winans in here. Okay, I see how it is. Well, yeah, 56% said no.
56%
They said no, they won't do it. They wouldn't marry a partner who's been with over 50 people.
Wow.
It was kind of close for the poll.
Yeah,
I was kind of shocked too because I thought like we would be like the anomaly.
Right.
But then again, I guess it shows the growth of a person.
Sure.
Right? Because you're answering from your own point of view.
Yeah.
Okay. Other question and stuff is, are dreams meaningless? And 85% said no, they come true. Agree? You agree?
I gotta say, I think that's true, and I think that exists on a spectrum too. Though, like, it's what is a dream, right? Like, dreams are things that we can establish with our conscious mind,
right?
And dreams are also things that can be presented to us in our subconscious.
Very true.
Right. So, you know what I mean? So I have dreams, I have aspirations. Dreams can be perceived as objectives and goals as well.
Facts.
Those are very real.
Those are real.
Right? Like, I can write that down. I can actually create a plan and pursue that. There are things that come to us on our subconscious mind when we're not really thinking. And I think those have meaning as well. I think a lot of what comes into those types of dreams are a function of what you truly desire and what you want. Right. So in any event, like in both realms of what a dream is, I think they're meaningful. I think they help to guide. I think they speak to who you are.
See, the funny thing too. So now check it. Last week, I had a dream that I was saving the world or some Armageddon type of stuff.
Hey, man.
And
now's the time.
It was some alien dance and everything. And at the end, we saved the world.
All right. Yeah.
I'm walking out with people I've never seen before.
Yeah.
And we're all walking on slow motion with NASA jackets.
Okay.
So I'm looking like, okay, woke up 15 minutes before my alarm went off. I was like, those are some badass jackets. So I took my punk ass and stuff, whatever, online and see that badass jacket. And I bought it.
Right. Yeah. Hey, prepare, man.
So I was
getting ready for your dream.
Exactly.
Yeah. Right.
Follow your dreams.
Yep.
Now, some people cuss me. They're like, what the hell does this got to do with it? Until they saw the jacket.
Right.
And so I posted the jacket.
Right.
And they're like, where you get that jacket from? I'm like,
my dream.
Exactly.
Oh, wait. You seen I tagged you in the watch post, right? Did you see that?
Yeah.
The NASA watch? I was like, okay, well, this might be serendipity happening, right?
Something's going on.
See?
Yeah. Something's speaking to you. Something's speaking to you.
That is just coming alive. But no, I feel like a lot of times that for me, I said no on a subconscious level, right? On a subconscious level and stuff, whatever. Like when people say they dream of fish, someone's pregnant,
right?
How?
Right? Yeah.
I'm not a dream reader. I'm just trying to get the understanding and stuff. Whatever. When people have those kind of dreams, but they said dreams are never like written out as how they plan.
I think,
and I think that's life, though.
I think a Caribbean one to that is dreams don't walk straight.
Okay.
Abstract.
That's what I heard from. I don't know if I heard that from my mom, but I definitely heard that
from somebody
and mentioned it that way.
Sounds very
dreams
Jamaican.
don't
Somebody Jamaican. Yeah.
Sound like something Jamaican, right? Dreams don't walk straight.
I just squint my eyes like I don't even know what that means. You know, sometimes when you get those translations, you be like, huh?
But you know what? One day you're gonna wake up from a dream and it's all gonna click and make sense. It's like, oh, it didn't walk straight. I got it.
And then it walked straight. Okay, run it. I like that. R.I.P. Rest in paradise.
Oh man.
Darkman X. Earl Simmons. Whatever you want to call him. Dog Man. Yo, he was a great hip-hop icon, whatever. I mean, I feel like the community got hit and much as the world, because I don't want to say the fully community, because especially that Woodstock video is floating around.
Right.
When he was at Woodstock and a lot of people in that crowd lacked melanin, so I don't want to say it's the community. It's the world.
I don't think anybody was melanin in that video when I see it.
because that was Woodstock, whatever, right? So I mean, like, I feel like this man had a big impact to the musical world / world, because not only from his hip hop side, but even from his poetry side as well.
Right. Yeah.
Right. So, R.I.P. to thoughts and prayers in his family and his kids that he left behind. He will be missed.
For sure.
How you feel about X passing?
Man, definitely touched me for sure. I can remember listening to It's Dark and Hell is Hot when I was in high school. And it's crazy because when you're in high school, maybe you can digest some of the message that's coming through the album.
Right.
But it's not until later years when you kind of like put that back in again and you run it again that it really starts to like impact you in a different way.
Right.
And over the last few years, like I've definitely been doing that. I've been reaching into the crates, listening to things that I heard in middle school and in high school that you bop to, but you didn't quite understand.
Right.
And have a new meaning now.
Right.
And yeah, he definitely falls within that bucket. So rest in peace, Earl Simmons. Definitely one of the greats.
How about you, Smooth? I hit you.
Well, I mean, for me, it's again like it's part of my growing up. Like I've always been involved in music, whether it be on the production side. I think I was trying to be a rapper at the same time DMX came out, and it was one of those things. When he came out, he automatically separated himself from the rest just from the raspiness of his voice.
Right.
You're like, oh, this is something different. He's not trying to sound like everybody else, and just the energy that he brought. I don't think at that time, there was another. Well, there was one other rapper that I felt energy from, and that was Busta Rhymes.
Right,
But-
and Busta was 90. He was 92 with Leaders of the New School until he started doing his own and coming with 94.
So, and for me, there had up until that point, there hasn't been another rapper that had that much energy. I mean, I remember when the first time Where My Dawgs act came out, it's like, what the hell is this? I was like, yo, why does this guy have so much aggression and why do I like it like that?
Oh, you talking about Get At Me Dog?
Sorry, Get At Me Dog.
Okay.
When Get At Me Dog came out, I was like,
that beat hit different, everything. That whole vibe.
The whole vibe. And I was like, oh, this is something different. Like, and just the tone of his voice. You felt it, right? And I was like, ever since then, I became a DMX fan. And it's like, he wasn't for me, he wasn't super lyrical as far as a poetic type flow, but the lyrics itself said something.
It had weight.
It had weight to it.
Gotcha. I'm not mad at that, man. I'm not mad at that.
No, like to that point, like you talk about the energy. I think there were rappers kind of had this. It was either you were a rapper with energy or you were a rapper with depth, and he was one of those ones that kind of bridged the two.
Yeah.
Yeah.
I can agree with that. Yeah, for sure.
So yeah, man. R.I.P. Oh, give me your best DMX bark, man. Oh yeah, that's Chihuahua style. What about you?
Oh, excuse me, man.
Yo,
I don't know what I don't know.
I think you just said "Get At Me, dog."
Yeah.
With the deal, I don't understand.
You went Pitbull on us, man. You went straight Pitbull, bro.
Boomer. Boomer, one love Boomer. I don't understand.
Yeah.
Clearly, we weren't the same kind of level of DMX fans. Because the dopest thing and stuff is that when Dark Hell Is Hot dropped, and then at the end of that year, you got Flesh of My Flesh, Blood of My Blood.
Oh, man.
I think for a hip hop icon, because in hip hop, 2 albums in 1 year has never really been done in the game of hip hop and stuff, right?
Yeah.
I want to say even back when they had like only 8 tracks to a album,
Right.
still. Dark and Hell Is Hot had more than, I want to say, including the skits, had about 17 tracks. And Flesh of My Flesh, Blood of My Blood and stuff had about 18 tracks.
Yeah.
So that's what I'm saying. Like in 1 year, you get 2 bodies of work for one artist. That's dope. In rock, that's normal. In hip hop, no, that's a feat.
Yeah.
Sure.
So yeah, you will be praised and missed, X.
Yeah, no doubt.
Most definitely. And yeah, thoughts and prayers to Smooth's boy, Prince Philip. Tell us how you feel, you British bastard, you bloody bloke.
My son actually had to come and tell me, and I was listen. I'm shocked to the stuff that my son sits down and researches and knows. Because I'm like, do you even know who Prince Philip is? He's like, I don't know, but you're British.
Yeah,
I said, yeah, you got me there. But I don't know. I was just even though being British and knowing how they have such an affinity to the royal family.
Yeah.
I was never one really like that to be
on
on it and be like, oh, it's the royals, it's that and the third. You knew when events would happen because it's worldwide news. But apart from that, I didn't really follow them like that. I knew that he was sick in and out of the hospital over the past years or so. Like that I knew.
Brother was like a walking dead to me, but that's just my opinion though. Because I mean, like he stepped down from his position from 2017.
Yes.
Right? And since then, I want to say in and out. That's when I got to know who he was.
Right.
I want to say me living in Canada is getting a better understanding of stuff of who he is, who he was, excuse me.
Yes.
And it's just, I want to say there's a few countries in the world with the queen on the currency, Canada's one of them.
Canada's one, yeah.
Australia, New Zealand, those places and stuff as well. Jamaica as well.
Yes.
And it was so fascinating that you've never heard too much about him. Like when I seen the bio and stuff on him as he passed, I was like, he was an interesting dude, but how do you marry a queen and you don't become a king?
You don't become a king. I'm still confounded with that. I don't
that's
know
a bit dodgy, mate.
I don't know.
It's a bit bloody dodgy.
I
eh?
don't know how that happens.
Yeah, who run the world? Girls. Beyonce told us that. So you can't be king on no queen's watch.
Not on the queen's watch.
Isn't it God save the queen? And queen's been kicking it fine.
Well, I mean, when my daughter asked me, I was trying to explain to her. I think it's more of a line thing. So you actually got to be part of that bloodline in order for you to be king. So
gotcha. That's dodgy though, because my thing and stuff is that if it was the other way around,
yeah,
set king was there, you marry, you become queen.
But you know what? But you as the queen, you're still not the ruling monarch. It's still the king that's the ruling monarch. So
is that because it's a parliamentary monarchy?
I don't know exactly,
because
but I'm thinking on the lines like that's kind of how it works. If I'm the king already and I marry you, you become the queen, right? Now,
well, if I'm you become
ruling. You probably become ruling if I pass because you've been given that title queen. And I think he could have been given that title king. I just not sure how it worked. Probably he just said, nah, you know what? Let's leave that as is because Charles is the next in line. And it's like, do you upset that family tradition? It's like, because let me look, yo, they off niggas in the royal. It's like anything to do with like kingship and stuff like that. Yo, brothers kill brothers over that shit.
Yeah.
So I mean, what do you do to yourself? I'd like to be king, but I'm probably more safer being the prince. Type of dance, like.
Yeah, I mean, I don't have a lot of in-depth knowledge. My knowledge goes as far as watching The Crown over the last, last few episodes of The Crown.
You talking on Netflix?
On Netflix, yeah. But I do know that there was some controversy around that aspect of things, right? Like the royal house remaining a Windsor, right, and kind of keeping that line, right? And it seemed like there was some controversy and there was a bit of angst as to like which way is it supposed to go. So while we're debating it, I think they were debating it at the time themselves. Well. Right? They were trying to figure out which way it goes.
Oh, shit.
We have the queen.
Yeah, we had the queen for a very long dash time, and you know what? Let's not forget this dude was like 99 when he passed. So it's not like
they say he was 2 months away from being a century.
Yeah, so he lived a full life.
Life, yeah.
True. I mean, past the common expectancy of a male. Right? So it is what it is, man. They said he fulfilled over 20,000 obligations as a ruling monarch. And
which is dope.
Yo, you put in your time, you did your thing, and at some point he's probably tired of this shit too. He's just like, I got to go to another event and represent the crown.
Yeah,
blimey.
He was here a few years ago and stuff, right? Like he was here like while he was still in power.
Right.
He was here a few times. I'm like, who the hell is a Prince Philip? And then they were like, that's the Queen's husband. I was like, when? I've never seen them together. Like the Queen will pop up random on her own, and like that's my boo. I'm gonna be with my boo. Like like it felt like a Stedman and Oprah kind of relationship. That's why. That's why I was like, are we sure? They're like, yeah. I'm like, okay. Remember, I grew up in America. We're not too fond of like the whole monarchy and everything and stuff, whatever, right? So I mean, like,
y'all fought the British.
Yeah, I mean, we have our battles and stuff. We decent now.
Okay.
We decent now, but I mean, not to be ruled and governed. And I mean, Canada's one of those places and stuff like with the Governor General.
Yes.
Right? A position and stuff like that. They answer to the Queen or they're the voice for the Queen.
Voice for the Queen.
So, yeah, like, just interesting. Yo, so who's more impactful with their passing? Prince Philip.
Well, I'm always going to call X's name first when this comes around.
So April the 9th is official. It's X's day.
It's going to be X's day, and then you're going to be like, oh, yeah, Prince Philip passed through.
Okay. All right, Matt. So we're here with the financial expert we got, our guru. talk a little money for us and stuff, whatever. Let me ask you and stuff, whatever. Like from the January dance with the whole GameStop event, break down that little situation and stuff. Now, it was a whole lot of dance between like stock and stock options and people was losing money. But explain in your words, how did that dance work?
Yeah, no, you want to jump right into it.
Why not, man? You know I'm a bastard like that.
Yeah, no, for sure. I mean, GameStop, it like being someone kind of in the finance space and understanding it, I stayed on the sidelines and watched it play out. Didn't get involved because, for a few reasons. One, I tend to be a fundamental investor, and I'll get into like what that all means.
Okay.
But specific to GameStop, you had a situation that was initially, I think, driven by a lot of speculation. Speculation is just, you're kind of banking on where you believe something has the potential to go.
Like call and put.
I mean, without even getting into derivatives yet, just keeping it super simple, super simple.
Yeah.
It's just speculating direction, up or down.
Right.
Okay.
Right. Specific to the GameStop situation, I think you have to understand that in any given market, you can make money when things are going up. You can also make money when things are going down.
Right. Okay.
Right.
Right.
And I think, at the basic level, a lot of people miss that fundamental understanding.
Right.
You kind of have that understanding that you buy low and you sell high, and that's how you make money.
Yeah.
Well, in any market, you can also make money when things are going down. The way that you do that, there's a few different ways that you can do that, but one of the ways that you can do that is by way of what's called shorting a stock.
Okay.
And what shorting a stock means is ultimately, when you understand, most people understand investing in stock. It's you buy something, and you sell it at some point in time in the future.
Right.
Well, the fundamentals of shorting an asset, stock, real estate, whatever that may be, is actually selling something that you don't own. Right.
Okay.
So
now, sorry to cut you. So you can short other stuff other than just stock.
Absolutely.
Okay.
And when you understand like the fundamental of what a short position is,
right,
you understand that you could do that with anything.
Okay.
Right.
Because I wasn't understanding that was just stock you could do.
Yeah. No. Sure. So I mean,
I didn't know that either.
What taking a short position ultimately means is there's this phone, right? If I'm speculating that this phone is going to appreciate in value, that is, go up,
right,
then I want to buy that phone today, hold it, and sell it at some point in time in the future.
Right.
If I'm banking that phone is going to depreciate in value, go down, what I would do is I would reach out to somebody that owns the stock and say, yo, can I borrow this from you? Right? I will borrow that stock.
Right.
I will sell it at today's price and tell you, I'm going to give this back to you sometime in the future. Right?
Oh.
Right.
So I'm going to borrow it from you.
Yeah.
I sell it immediately in the marketplace. I wait. If the price of it goes down, I buy it back when the price has gone down, and I return it to you. Right?
Oh.
I've now made a spread. I sold
Okay.
it today at what's called the spot price. Spot price means now.
Right.
Right? So I've sold it at spot. Maybe that spot price was $10. Right? I've waited. I can now purchase that same asset back for $5. I buy it back, and then I return it to you because that's my obligation. I borrowed it from you. Right? So I borrowed it. I sold it for $10. I bought it back for $5, and I gave it back to you, and I made $5.
Right.
That's the simplest way to understand it.
Got it.
I like that.
Got it.
The mechanics of what's happening in between, of course, if I'm borrowing something from you, I'm going to also pay you some interest, right?
Right.
Yeah.
So say the interest that I paid you over the time that I borrowed it was $1,
Right.
right? So I give you the stock back and I give you your $1, right? And that
Right.
eats into the $5 profit that I made because I have to
So
also
now
pay that $1.
you made $4.
So I've now netted $4.
Right.
But that's the simplest way to explain how a short position works and how to make money when things are going down.
Right.
And to the point that you were making, Smooth, it's like, I can do that with anything. Doesn't necessarily have to be stock. I can borrow something from somebody, right? Sell it at today's market price, knowing that I have to buy that very thing back to return it to the guy that I own it to, that I owe it to, right? And that's ultimately called taking a short position. And, in the GameStop scenario, that's what was happening. Now, you'd mentioned like puts and calls and different types of options.
Right.
Those are what are called derivatives, right?
Okay.
A derivative is it's ultimately a contract that gives you the ability to either sell something at a predetermined price or buy something at a predetermined price. So instead of me actually borrowing the asset and selling it eventually, I may enter into a call option or a put option. A call option gives me the ability to buy something at a predetermined price, regardless of what the price is at that time.
How far in the future is that?
And that's the thing with a call option. The value that you pay for a call option is actually a function of how long that call option is good for.
Okay.
Right?
Okay.
So what people do with options is it's a way to leverage the asset, because I don't actually have to buy the full value of the asset.
Correct.
I'm now buying a contract that gives me the ability to either buy or sell the underlying asset at a predetermined price.
Right.
So in that way, you're pretty much simulating the same thing as a short, right?
Right.
Because now you don't necessarily have the asset itself, but you have a contract that's tied to the asset at a certain price.
Is that more safer than the short, or
That sounds kind of volatile, though.
does each other have its advantage over the other, or?
Yeah, so it's derivatives, right? Derivatives being, and like I'll define what a derivative is. A derivative is something that ties you to an asset without it actually being the asset. So when we talk about a call option or a put option, that's ultimately an agreement that says, hey, I'm giving you the right to buy this phone within this time frame at this price. Or I'm giving you the option to sell this phone, right, within this time frame at this price. How do derivative products become risky? Well, you don't actually own the asset. All you own is that agreement that allows you to buy or sell at that predetermined price. If the agreement expires, then I paid for something that I never actually used.
Gotcha.
Right? And so in the basis terms, derivatives tend to be much riskier than owning the underlying asset. Because with the underlying asset, you still have the underlying asset.
Right.
Right? Whereas with derivatives products, your derivative contract, your option can expire worthless if you didn't actually exercise it right, and use it. You bought it, you kind of waited, you didn't end up purchasing the asset, you didn't end up selling the asset, you didn't do anything with that agreement.
Right.
The time has elapsed. Well, that contract is worthless.
Woo.
Right. So
it makes sense why so many people were losing money in that process.
So a lot of people were losing. I mean, there's a lot of people that made a lot of money through GameStop. There's a lot of people that lost money through GameStop. I just think that there were two schools of people. There were people that were actually playing the GameStop game that understood what they were doing.
Right. Who had the knowledge.
Right. And then there were people who were playing the GameStop game with just kind of...
Because they just know the name of GameStop.
Yeah, and it's on the news. Yeah. It's going up, right? It's going up. And so I'm just going to jump in. But not understanding what was happening there, right?
Because my whole thing, when I first heard about it, and I was trying to wrap my whole head around it, and how it was explained to me is that the people who buy shorts were betting on the fact that GameStop is a brick and mortar. We know brick and mortars, they're closing all the time.
Correct.
So it's a company that would be losing money, maybe eventually to the point where they would have to close. So that's why
GameStop itself and stuff, they have online stores.
Sure.
Right. So even if they do close the brick and mortar, they still have an online company and stuff which you can still pre-order and purchase games and consoles, etc.
Right. But with the brick and mortar, you're still paying for the rent, the overhead costs, all of that stuff. So you're losing money if you don't have traffic coming in and buying from the actual store.
Gotcha.
So in a case like that, you would see that I'm assuming the stock would be going down. So this is what the short sellers are betting on?
They were betting, yeah. So that's ultimately what a short seller who was kind of looking at fundamentals was banking on, right?
Right.
They were looking at it and saying, you know what, this is a dying business model. I'm going to short this stock, right? So going back to that definition of shorts. I'm going to borrow this stock from other people that own it. I'm going to sell it today with the expectation that I'm going to buy it back tomorrow at a lower price because I am anticipating it going down. Right. In value.
Got it.
Now, that sets the framework for what was happening with GameStop. Now, what happened with kind of taking it to another level, what happened with GameStop was, and this is kind of like a an issue that exists within the financial markets as a whole is it was typically hedge funds that were entering into these short positions, right?
Right.
And what tends to happen is there was more short positions than there were actual stock of this company.
Oh wow.
Oh.
Right? So
this is where the Robin Hood issue came up.
this is where Robin Hood now comes in. Like, I mean, it gets really deep, right? But
Yeah, because like we grazed on it, but like I said, we're coming to the pilot
Sure,
who knows how to
sure.
fly the plane.
Sure. So, what ultimately happened was you had these hedge funds that were shorting the stock. There was actually more short positions out there than stock that existed.
Right.
Right. There are some retail investors, and I don't know if you guys followed like the Wall Street Bets and kind of this forum of people that were just like regular retail investors identifying that, wait a minute, these hedge funds are shorting the stock. But remember, these hedge funds have to buy this stock back at a point in time in the future to return it
Back.
to the person that they initially borrowed it from.
Right.
Yikes.
When that was identified, it was like there is literally not enough stock for them to cover their short positions. So what did they do? Retail investors started buying up the stock, right?
Right.
And when you buy stock, ultimately what happens, it's a bidding process, right? It's like, I'll buy it for 5, the next day I'll buy it for 6, the next day I'll buy, like that's how auctions work, right? That's how prices
go up.
appreciate. What that created was a situation where the hedge funds now were expecting the price to drop. We're now in a position where
They're losing.
I'm losing a lot of money here.
Yeah, because it went to like 300 and something.
It's not dropping.
Because it's not dropped. It's not moving in the direction that I needed to.
Because I heard when it started, I'm like, some people were saying like the stocks was like $4.
It was like 4.
Yeah.
And then it went all the way to like 300 and change. And I was looking like, GameStop? Punk ass GameStop? Where I take my old games and they disrespect me on my money back?
Right. Yeah.
I told you my Pokemon Snap story
I know,
already.
You're still hurt from that. We understand
I'm emotionally
that.
still hurt from that.
Hey, we get it. You were one of the short sellers, I guess.
You're damn right.
But you had what that ended up creating was what's called a short squeeze. A short squeeze is a situation where somebody who's in a short position is finding it difficult to exit that short position. In order for me to exit that short position, I have to buy it at a higher price that I initially shorted it for, putting me in the opposite situation that I want to be in, right?
You're no longer making money, you're losing.
You're now losing a lot of money.
Right.
Okay. And so what retail investors were doing, kind of identifying that there's more short positions than there are stock available, they just bought up the stock as much as possible, right? And forced the hedge funds to be in a position where you can exit, like how much of a loss do you want to take? Because tomorrow it could be even higher than it was yesterday.
Right.
So you just got to tap out as soon as possible.
So the fundamentals of the underlying company went out the window, right? And you just had people that were ultimately betting against the positions that they were on. Are you one of the short sellers?
Right.
If that's the case, I'm going to squeeze you and continue to have this price appreciate and put you in a worse position. And if you're a short seller, you wanted the price to come down, right? Fast forward to like the Robin Hood thing that you were referring to, kind of observing all of this, and there's a lot of controversy around why Robin Hood made the decision that they made. They ended up closing the buy side of that trade, so they prohibited anybody from continuing to buy
the stock,
but they still enabled individuals to sell. Right. So when you don't have any buy pressure and you have selling pressure, your price will come back down. Right. And so hedge funds in general were kind of bailed out, right, as a function of that decision.
Gotcha.
Because retail investors didn't have the ability to keep the price where they wanted it to be, to continue to squeeze the hedge funds that were in their short positions.
I understand now.
So a lot of moving parts. I mean, it gets even deeper than that.
No, because it clicked to me and stuff when we were talking about the Street Fighter thing before recording.
Yeah.
And I was like, yo, that's right. GameStop punk ass did the thing with the Robin Hood and we grazed on it. And I was like, I didn't fully understand it. Like, I'm taking the information. I'm like, okay, there's some stock options. I'm like, people was losing mad money, but then it was going up. I was like, what? I'm like, you gave it crystal clarity.
The fundamentals of it is if you understand what a short position is, you start to understand how that situation even came to be.
Gotcha.
Right?
Got it.
And for me, I didn't participate in it at all. I stayed on the sidelines because I knew at the end of the day, this doesn't end well. And
with your knowledge and know-how.
Which is, like, I mean, you can potentially make some money, but you don't know when the game stops, right?
Right.
You know,
right.
Well played. Well played.
So you know, it's if knowing that, it was kind of like, you know what, I'd rather sit on the sidelines and play the market and fundamentals that I understand, because I can't time this when this is going to collapse.
Right. Have we seen anything like this happen, like before, maybe like on a small, because I guess why it got so much notoriety is because it was like people, I think it was, someone said it was a group on Reddit. Yeah. Who said, hey, we're going to go in and we're just going to buy.
Yeah.
Has there ever been a situation like that prior to this where it's been such a heavy buy on a on a stock that's usually short sell?
So what I've seen in the past is it's all about how much buying or selling power you have, right? And when we talk about buying and selling power, it's how much dollars are you working with to be able to influence a stock's price, right?
Got it.
You know, if I have a lot of dollars to pump into to buy a stock,
right,
I can actually influence its price, right? I can push its price up. As a single retail investor, I don't have that ability.
Correct.
But when you had a group of people in a forum, right, on social media, kind of corralling and rallying and saying, okay, we're going to do this collectively,
right,
you now had enough of that buying power to actually go up against hedge funds.
Power to people.
Power to the people. So you've definitely seen the scenario play out between two large institutions, right? Between two hedge funds,
right?
Kind of on opposite sides of a trade, and like, you know, like it's like, well, who has the most buying and selling power here? And usually the bigger power comes out on top,
right?
But in this instance, you had a lot of small players.
It was the common man.
It was the common man kind of rallying together, going up against those that had bigger dollars, right? And I mean, you know, there's even around that narrative of it being kind of the small guy versus the big guy, like David versus Goliath. Is a bit controversial too, because, you know, there's people that will swear up and down that it's not quite exactly how it played out, but the reality of it is it was small retail investors versus really large institutions of capital.
Let me ask you something. Pertaining to social media now, right? It crossed my mind and stuff earlier. You ever seen on social media, especially like Instagram and stuff, where they have people saying, give me $100 and I can flip it over to 1,000?
Yeah.
How do you feel about that? Like from your side with your knowledge, and then if you didn't have the knowledge you had, would you fuck with it?
No.
Okay.
For a few reasons. It's always, and I say that with a grain of salt, because I don't want to step on anybody else's opportunity, right?
Okay.
Right.
But what I feel is happening in those situations is you have, if somebody's soliciting you with an investment opportunity like that on Instagram, it's already contravening securities laws. So there are actually there's a very clear securities framework that exists.
I got 2 chicks in my DM trying to get me on some shit like that
right away. I mean,
or are they chicks?
Forward that to the Ontario Securities Commission, and they end up with a problem, right?
Okay.
So you know, you're seeing a lot of that, but you know, just by way of the securities laws that exist and how I can go and raise capital from an individual to invest in a project, is very strenuous. And if you're seeing that off the rip, it's already a red flag, because you're already in contravention of securities laws that exist that prevent people from actually doing that.
Well, it makes sense now, because I remember way back in the day when I used to see that frequent.
Yeah.
It's now, those profiles are now private.
Sure. Yeah.
So I guess they're trying to hide from the security laws that they're breaching, right?
Yeah, I mean, you're not going to see private securities solicited like that. And what I mean by private securities is when you have a publicly traded company. So, you know, you're Apple, right? You're Microsoft. Companies that actually trade on a publicly traded stock exchange. Anybody can participate in that investment. Right? Anybody above the age of majority can participate in that investment.
Okay.
I can buy Apple, you can buy Apple, nobody's stopping you from buying Apple.
Right.
Or Microsoft or IBM or any publicly traded company. When it comes to private investments, somebody who's saying, hey, you know, give me $1,000 and I'm going to invest that in this project and it's going to generate this return. That's what's called a private placement investment. And that individual has to follow very strict rules with respect to how they raise that capital from you.
You see, and the photos and stuff, remember the gram, pictures worth 1,000 words. So you got like a stack of like people in their car with like money lined up on their sleeves. Fanning out the money and stuff for them. You're like, just $100 can get me a G?
Yeah. So that's the first question that you want to ask. It's almost like, under what securities framework are you even able to solicit this investment to me?
Because I think one of the things that catches a lot of people is that they always say this is 100% legal, and I'm scratching my head. I've never heard how you can make $100
turn into a G in a day.
Unless it's illegal.
Unless it's illegal.
It's illegal.
Facts.
Yeah. And the crazy thing when it comes to those securities laws to begin with, I don't know, there's two minds to it, right? Like it's framed in a way where it's supposed to protect individuals because, what stops this dude from running away to Mexico and you never see him again? You ran off with your money, right?
Yeah.
Si, senor.
So that's why those rules exist. But when you look at the securities laws and you look at who would be able to invest in an opportunity like that, typically it favors high net worth individuals. So there's a definition called the accredited investor definition. That's somebody who has a net worth of $1 million, can't include their principal residence, so forget where you live, and makes $200,000 a year. That individual would be able to invest in a private investment opportunity.
Okay.
By law. They can participate.
Because the idea there is they're safe from anything that might happen.
You can weather the storm if something goes wrong.
Right. Okay.
You're, even the rules go as far as identifying them as somebody who's sophisticated enough to make that investment decision, right? The problem with that is, it's just another way that the rich get richer because they have access to opportunities that
the poor
other people don't necessarily have.
The haves and the have-nots.
Right.
So, that's why it's supposed to exist, but that's one of the, I guess, the negative side effects of having those types of laws, because there are opportunities that are out there that are only private and not listed on a publicly traded exchange that are really good, that you may not necessarily be able to invest in because it would be against the law.
Now, would that be more on the Canadian side or the U.S. side, or both, or just the continent of North America in period?
Both. And generally speaking, there's securities framework like globally, right? In the U.S., you have the SEC, the Securities and Exchange Commission.
Yeah. I think I heard a lot. I think I got wind of them with the whole Elon Musk type of things when he started saying certain things on Twitter and he would get in trouble from the SEC.
From the SEC. So they regulate that. The U.S. they are notoriously the strictest and hardest regulators when it comes to securities law and that sort of thing.
Really? Didn't know that.
Super strict regime. In Canada, it's the Canadian Securities Administrators, and then they're broken out provincially. So in Ontario, you have the Ontario Securities Commission. And they're ultimately the governing body that define the rules and how do you participate and what do you need in order to solicit private securities and that sort of thing.
Okay.
Yeah.
Okay. No, okay. Well, I got 10 million questions. You want to jump in?
Nah, we're going good right now.
Let's run it. All right. I run this shit. So shut your ass up over there.
Well, I'll chime in every now and then.
Okay. Circle back. But to answer your question, like when I see something like that on Instagram, I'm immediately like, come on, yo.
Yeah, but you're in a position. You're in a position stuff. You're like, what you're talking about, Willis?
Yeah.
When everybody else and stuff, like if I'm none the wiser and stuff, and I'm like, I got $100 to spare.
Right.
And then you start looking at some type of things, and then much as now from the Canadian side, you're factoring where all I see is people fan out US dollars. Yeah. So that means if I give you this equate to 100 US,
sure.
And it comes back to
US
me, it's gonna currency exchange rate and everything like that too, right?
Yeah.
Like even like when I thought about the stimulus and everything and stuff, that's 1,400 US.
Yeah.
Right.
Converted over at that time was probably about like $1,730 something. Okay. So I was like, I'm like, that's still sexy to somebody and stuff on the Canadian side.
Sure.
It's a lot extra sexy because you're stretched to a little thing, right? So I'm like, I just wanted to figure out how that would work because I'm saying no to it regardless.
Yeah.
But when I'm looking, I'm like, well, is it just me or is it just the same photos that's kind of like screenshot and put to someone else's gram talking about, I got this money. It works.
Hey, what I would say too, though, is like, it's not to say that, you know, like those types of schemes exist and some people do actually make money. It's just, you have to ask yourself, this wasn't framed in the proper way, which probably means that the underlying opportunity itself isn't super legitimate. Right. So, you know, whatever it is that's generating the return, if it is generating a return or if it's a Ponzi, whatever it may be, it didn't even start off within a legal framework of how it was brought to your attention.
It's already dodgy.
So it's already dodgy off the bat.
And with that in mind, you're probably subjected to maybe fines and penalties if it comes.
So as the investor, typically those bodies kind of like, you know, they aren't out to get you.
They're out to get
the guys who were out raising the money. And
exactly.
Got it.
Yeah.
Okay.
Yo, okay. Speaking of which, man, if you had $1,400 US from the stimulus with your know-how, what would you do with it?
I mean, it's there's a wide array of things and opportunities to look at, but I kind of have this 3-part process, and I don't want to kind of jump right into that, but I'm a heavy believer in trying to establish your portfolio with real estate to begin.
Oh, so real estate will come first in your world.
Real estate comes first in my world.
Okay.
And I don't know if we want to jump into that right away, but
I mean, we here. We can dance a little.
To that point, though, $1,400 may not necessarily give you the opportunity to jump right into real estate.
Facts.
Right? Because it is a bit more capital intensive.
Okay,
right?
so then let's not jump right away.
Sure.
Let's just figure out, okay, you have
$1,400, what can you do?
Right.
So with $1,400, and this is going to sound super unsexy, right? You know,
people want the truth. That's what they want.
The truth of it is this, and it's not exciting at all. It's when you're looking at your investment potential, what you have the ability to do with your money, you have to look at it from 2 angles. Look at it from, well, do you have debt? And then look at it from, what do I have the opportunity to invest in? If you are in debt, right? And typically like consumer debt, which tends to be like high interest debt.
Right.
Dig yourself out of debt.
Okay.
Right? So it's crazy because it's like, I'm going to take my $1,400 and just pay off my credit card. Yeah, pay off your credit card. Because, you know, with, you know, credit card debt, you're probably incurring about 20% in interest annually, right?
Right.
And so you're digging yourself into a deeper hole. Even if I give you an investment opportunity, you're still in the hole.
Right.
And you're getting further, you're digging yourself further and further into the hole.
Yeah.
So if I give you a really good investment opportunity, but you're already underground, you're still in the ditch, right? But you're stepping on a stool in the ditch. But the idea is dig yourself out of the hole first.
Okay.
Right? Because there is no investment opportunity that someone can put on the table that is going to guarantee you a return.
Yeah.
That's one.
Yeah.
Right.
But your debt is guaranteed. You're going to incur 20% interest
Every
in perpetuity until you get out of debt. It's a super unsexy answer because people want to know, like, what am I going to throw it in to make me some money? And the idea is, well, stop losing money. Like, how do you get out of losing money first? Let's dig ourselves out of that.
Gotcha.
Once we're there, all right, now let's start looking at opportunities to kind of
stop the bleeding before you do anything else.
Yeah, you got to stop the bleeding first.
Okay.
You got to stop the bleeding first.
Makes sense. Okay. So, what would you recommend for like a beginner to investments? Like, what steps would you recommend? So you said real estate.
Yeah.
Now, what if you don't have the capital for real estate and stuff? Do you just save your money until you become ready to do the real estate dance? Do you recommend anything else in between?
Yeah. So I would say that there's a stage of saving and accumulating some capital to make your first true investment opportunity, right?
Okay.
And so stack a little bit first, right? And the reason why I'm partial to real estate is I have this 3-part process to how I identify opportunities, right?
Okay.
The first piece is it's relatively easy. I don't want to say super easy, but it's easier to establish an investment opportunity that yields some benefit in the future.
Okay.
So like if I have a 10-year horizon and I park some money and I can forget about it for 10 years and I don't necessarily need this thing to start making me money today, there are super passive investment opportunities where you can park that capital and know that you're now setting yourself up for the future.
Okay.
So I always say start by setting yourself up for the future. Not about how you're going to generate a return in the here and now, today, tomorrow I got... It's
like the George Foreman grill. Set it and forget it.
Set it and forget it.
Yeah.
That shit might burn depending on the meat.
set it and forget it. And I like real estate as a vehicle for that because one can go out, buy a passive real estate investment, like say, let's call it a condo. I bought a condo, and I've now put a tenant in that condo, and that condo is in a relatively stable rental market, and it's just kind of doing its thing. And it's not necessarily bringing me money in today, but that person is servicing the debt, right? The mortgage that I have on that, and I'm building equity over time, right? And I've kind of set it and forget it. Right. I put my $30,000-$40,000 down into this condo. I put a tenant in there that, that tenant may cycle out and a new tenant might cycle in, but it's a relatively passive investment. And it's not throwing off cash at you today because the rent that's coming in is likely going towards paying down the mortgage, covering your property taxes, whatever other expenses you may have.
Got it.
But you're building equity. Right. And that equity will have, you'll have a lot of value to extract in 10 years, in 15 years, 7 years. If you have like a nice real estate, if you're in a nice real estate market where you're kind of riding the returns, right? But it's relatively passive. So it's setting and forgetting something for the future. That's the first thing that I suggest.
Okay.
Right?
What about those Airbnbs? Like, what if you have to buy a property and then use that as an Airbnb? Because I noticed some people are doing that as well.
100%. So, which is going into number 2.
Okay.
Right?
Okay.
All right. I'm ahead of the game.
So number 2 now is, okay, you know what? I parked some money. So I know that when I want to retire, I have $300,000, $400,000 in equity value sitting in 3-4 years. I'm sorry, in 10, 15, 20 years time.
Right.
It's just $300,000, $400,000 is just there. It's gonna be waiting for me. I'll call you when I get there.
Yeah.
Right. But it's doing its thing. Now you start to say to yourself, okay, well, now that I've figured out the future and how there's going to be something for me in the future, how do I start thinking about the today, right? And so you got to get a little bit more aggressive, right? It's not as passive as that is. So enter something like short-term rental as an example, right?
Right.
Now I can couple something and say, okay, well, I'm going to invest in this piece of real estate. This piece of real estate is not only going to just cover my mortgage and the other expenses associated with holding that piece of real estate, but if I get more aggressive with my strategy, I can actually have some cash flow coming in. So I'm actually making more than I have than I have going out from the carrying costs associated with that.
Nice.
Right.
Right.
And it's a bit more management, right? Right. Your Airbnb, you got to manage guests.
Right. When people come in and out, you have to do the maintenance and everything.
Linen, cleaning, all
Right.
that stuff. So it becomes a bit more aggressive, but now you're kind of doing two things, right? You're kind of have an asset into the future, but you're also generating some cash flow because with Airbnb, you're typically making more than you have carrying costs going out to carry the property.
Nice.
Right. So you're netting another, say, $2,000 a month that can go into your
pocket.
Because opposed to having the rental income coming in, you're having income coming in from from Airbnb guests.
Short-term rental, yeah.
And you can probably, depending on the market, you can increase whatever you're doing that night for, and so forth.
So I'll give you let's some simple math in that respect. Say my mortgage is $2,000 a month. That's what I need to pay.
Right.
On a short-term rental platform like Airbnb, I'm maybe charging $200 a night. Right. That's 30 days in a month. That's $6,000 a month. Maybe I'm only occupied 80% of the time. So that's actually $4,800 a month coming in. So I have $4,800 coming in. I have $2,000 that I got to pay for my mortgage.
Right.
I have some other expenses. I got to pay cleaners. I got to pay, maintenance,
bed sheets,
supplies, and stuff like that. Right. At the end of the day, maybe I still net $2,000, right, after covering all those.
After
expenses,
covering
right?
everything.
So that's kind of moving into that second piece. That second piece to me is not kind of building equity and kind of set it, forget it. It's now talking about how do I generate some cash flow,
Okay.
Right? Like, how do I generate some supplemental cash flow? And there's a variety, there's an array of different vehicles that you can use to do that. That's one way to leverage real estate to generate some cash flow, right? So you talked about Airbnb. There's also getting into like multifamily real estate. So now
is that number 3 on your list?
No. So we're still in that
Still
number two. Still in that number
Okay.
two. Like another way to kind of be a bit more aggressive than just buying like a passive
Yeah,
property.
the equity,
have
just
a
for
single tenant in
getting for
there,
equity.
right?
Right.
I purchased a property, but it's a triplex and there's 3 units in it, right? And the rent from 2 of the units goes towards my carrying cost, and the rent coming in from my 3rd unit
It's banking, extra
is
bonus.
cash flow that comes into my pocket. But again, now you have 3 tenants. I have a lot of stories with managing multifamily buildings. It gets tricky.
Yeah.
And that's when I talk about it being a bit more aggressive. Like, if you want more out of it, it's going to require a bit more headspace and a bit more work.
You don't work, you don't eat, you don't grind, you don't shine.
That's exactly what it is. So that's another way to kind of fit in that number 2 bucket with real estate. But there's tons of other ways as well to kind of satisfy that cash flow stream as well. Like, you can invest in dividend paying stocks, right? So that is, I bought a stock, that stock actually pays me a dividend for being a part owner in it. Right?
Okay.
A lot of people forget that, or maybe not forget, but don't quite understand what it is that you're doing when you what it is that you're doing when you actually buy a share in a company.
Right.
You're a part owner.
Right.
Right. If that company pays dividends, right, which is a portion of the profits that it's making, then I'm entitled to some of that profit that company is throwing off.
How many, I want to say, let's say public stocks.
Yeah.
How many would pay dividends?
So there's kind of, there's a lot, but
Ballpark figure.
Oh man, I mean,
more than 50.
Oh yeah, a lot.
Okay.
There's a lot. There's
Gotcha.
a lot.
Gotcha.
And it really boils down to, dividend paying companies tend to be more mature companies. They've kind of found their footing. They're not companies that need to reinvest all of the profit that they make back into the company to continue to grow.
Right.
Right? They kind of have this residual profit, and it's like, you know what? We've taken some of that profit, we've reinvested that in the business to ensure that the business is, going to sustain itself into the future.
Yeah.
Right.
But that other net profit remaining after we kind of like reinvested in ourselves, we can actually pay that out to our shareholders.
Gotcha.
Right? Because shareholders are your owners.
Yeah.
Right?
Yeah.
We're going to pay distribution out to our owners. So more mature companies tend to pay dividends. So banks, energy companies,
Right.
Okay.
real estate investment trusts like a RioCan or like a Callaway REIT.
So what about companies like Apple,
Insurance
Google,
companies.
and stuff like that? That's not considered dividend companies.
So interesting enough, a lot of tech companies don't pay dividends.
Oh.
Okay.
Some do. So like Microsoft now pays a dividend, but for years didn't pay a dividend. Right. And the reason they didn't pay a dividend is the profits that the company was generating annually were just reinvested into the company because those profits were needed to continue to grow the company.
Right.
Right. So I can't just dish it out to you as an owner. If I do that, then I'm stagnant. I'm just right here. Right. I need to invest in the next iPhone.
It's always research and development.
Research,
with the tech
R&D
companies.
dollars. It kind of rolled right back into the company. I can't
Gotcha.
distribute that as a profit, as a distribution to you.
Compared to like the banks.
Compared to the banks, who are kind of like, they're just kind of coasting.
Their model is set.
Yeah.
We're coasting. We're charging our fees. We're charging our interest, right? Some of those profits get reinvested into the banking infrastructure, but high growth tech companies tend to like need a lot of money to continue to reinvest in itself, to continue that growth.
Gotcha.
It's only at the point where they reach a certain level of maturity that they say, you know what? We're at a point now where this residual profit that we're making, we'll start paying dividends out to our underlying shareholders.
Got it.
So like an Amazon, for instance, Amazon doesn't pay dividends.
Right.
Amazon just continues to roll its profits into growing and becoming a bigger Amazon.
Right.
Fucking conglomerate.
Right, let's build 100 more fulfillment centers
Right.
around the world, right?
Right, true.
Let's do that. So, it really depends on what type of company you're investing in that's going to define whether it is a dividend paying company or whether it's a high growth company that's going to continually reinvest in itself.
Okay. Help break down what an ETF is and what it means.
Yeah. So an ETF stands for Exchange Traded Fund.
Okay.
Okay.
What Exchange Traded Fund is most people are probably most familiar with what a mutual fund is. Right.
Yeah.
Mutual funds, it's kind of like, you're investing in this fund. That fund is invested in a diversified basket of things.
Okay.
Right. So I may be invested in this mutual fund that has some RBC stock in it, some Royal Bank, has some CIBC in it, has a variety of companies mixed in it. Right.
Got it.
So I'm now not investing in a single thing. I'm investing in a basket of things. Right.
Ooh.
That's what a mutual fund is, and that's what most people are familiar with.
Right.
Now, an exchange traded fund.
Is that like the Dow Jones and?
So the Dow Jones is an index, right?
Oh,
and
okay.
like the S&P 500 is an index that
NASDAQ
tracks itself.
index, right.
So these are, those are indexes that track themselves to a diversified basket of things.
Right.
But on the exchange traded fund side of things, the reason I'm kind of correlating it to a mutual fund is people tend to understand what a mutual fund is to a degree.
Yeah.
An exchange traded fund emulates that. It's a basket of things that you're investing in. You're not investing in any one thing. The difference with an exchange traded fund is that it can be instantly traded in the marketplace. So like any other stock, right, that you can buy and sell, you can actually buy and sell stock in an ETF. Right, so that ETF that you're invested in is actually diversified across many things.
Right.
So when I buy Microsoft stock, I'm buying Microsoft, and now I'm subject to the movement and the valuation of Microsoft.
Right.
Right.
If I invest in an exchange traded fund, I'm now looking under that exchange traded fund and say, okay, what diversified basket of companies am I invested in?
So you might get other tech companies in that basket.
Right. So I may purchase an ETF. Like, I'll give an example. Like ZEB. ZEB is a exchange traded fund that is a financial institution exchange traded fund. So you're invested now in RBC and some CIBC and some Scotiabank and some BMO and a variety of financial institutions.
We're getting back to the sexy part. I like the sound of this one.
Right, but you're now investing in one thing, but that one thing is giving you exposure to many things.
Right.
So now I don't necessarily need to bank on RBC, right, and own RBC outright. I'm holding this ETF that's giving me exposure to all of the banks.
Okay.
Right?
Okay.
Which kind of diversifies your position, right? So if I'm bullish or if I'm, if I want to invest in financial institutions, I don't need to buy the individual stocks of all those banks. I can buy an ETF that emulates what owning a basket of those stocks look like.
How much would an ETF cost? Average, because you're buying an array, so do they get like a collective price from all the companies in there, or no?
Something like that. ETFs trade at their own market value.
Okay,
it's whatever the underlying mix of that ETF is. Like,
right.
So, when I talk about like a ZEB may be 30% RBC, 20% Scotiabank, 10% BMO. That consolidation of all those things that make up that ETF. Is ultimately what determines its value, right? Based on its pro rata share of what's kind of mixed into that underlying ETF.
Gotcha.
Right.
And the movement of that ETF is a function of how the underlying companies in that ETF are performing.
When they say buy low, sell high, what the hell does that mean?
It's just that, right? And I think, I love the fact that we covered what shorting a stock is, because you can sell high, buy low, right? And so buy low, sell high is really just purchasing an asset for a certain price, selling it when that price goes up.
How do you know when to sell?
There's a lot of ways to look at that. So what I would say is there's two schools of thought when it comes to how you invest in stock. There are fundamentalists.
Okay.
And then there are technical investors. And neither school is wrong, but they're looking at very different things, right? So a fundamental investor is looking for, to your point, right? Like you were talking about like the fundamentals of a company,
right?
Like what are this company's prospects? What's the cash flow that it brings in? What do the financial statements look like? Right?
Right.
That's a fundamental investor. And there's a lot of technical indicators that I can kind of go into there that would determine whether you're buying at a good price and when is a good time to sell.
Right.
A technical investor is not so much concerned with the financial statements of a company. They're more concerned with the price movement of a stock.
That's kind of like the average person.
I would say so.
Okay.
Yeah, I would say so.
Would a day trader more fall in that
A day
As a
trader
technical?
would certainly fall into the technical investor category.
Okay.
And again, neither school is right or wrong.
Right.
They're just different schools of thought.
Okay.
Like a fundamental investor, the most popular fundamental investor would be Warren Buffett.
Right.
Right.
I mean, you want Warren Buffett money, so you would try to do him.
But the majority of people do not invest like Warren Buffett.
Correct.
Right?
Yeah.
Warren Buffett is not concerned with price movement. Right? He's not watching a
He
stock.
has the capital, the net, the gross, the yuck money, the fuck you money to throw up.
Well, not even so much that as much as it is like he's looking at the company that he's buying.
Right.
Right.
Right? Like when you buy a stock, you're buying a portion of that company.
Mm-hmm.
Right? And so a Warren Buffett type investor, a fundamentalist, is looking at the financial statements of that company and trying to determine what the future and ongoing performance of that company is.
Right.
An investor like Warren Buffett is concerned with things like dividends, right? What kind of dividends and what kind of cash flow is this company going to pay me over time? Will that dividend that they're paying me continue to grow over time? Those are the types of considerations that a Warren Buffett fundamental investor is looking at, and he's got a long time horizon. I'm buying this company because it's a good company, and I'm buying it at a price today that is below what I believe to be its current market value.
Okay.
What that means is at any given point in time, I want to make sure that I'm getting this thing at a discount to what it's actually worth.
Right, and the trajectory will go up for it. So then, therefore, you'll go from, let's say, the $2 mark to your $4 mark, possibly in the future.
Exactly. And the other reason you do that is Warren Buffett kind of refers to that as the margin of error. It's if my projection of this company is wrong, am I still buying it at enough of a discount that it's still a good price, right? That I'm buying it for.
Right.
A technical investor on the other side is, you've probably looked at charts, right? And you've seen those green bars and the red bars, and it's up and down. And I'm looking at the price movement. A technical investor is much more interested in price movement. And what movements in price suggest for future movements in price.
So how long would you recommend? I want to say, do you look back a year pertaining to the stock? Yeah. Or do you go back as far as you can?
So a fundamental investor is looking at years worth of financial statements. So they're looking at, 3 years at a minimum worth of its past financial performance to make determinations of what that future financial performance will look like. And
a technical,
you could, they exist on different scales. So I can be looking at a 1-day chart. I can be looking at a 50-day chart. I can be looking at a 15-minute chart and what that stock price has done in the last 15 minutes.
And then they'll just go at it.
And that's why they typically are the day traders, right? Because they're in and out of stocks. Warren Buffett is going to buy something because this is a good company. I'm going to hold this. Hold it for a minute. And the cash flow and dividend that this stock is going to pay is going to generate a return for me. And then the value of that company itself will also appreciate over time. That's how they're investing. Okay. A technical investor is ups and downs and patterns that are created by that ups and down. Right. What that could potentially mean for the future direction of that price. But it's much more psychological than it is fundamentally the underlying company. Ultimately, what I'm looking for when I'm looking at those bars and charts is I'm looking for what is the market doing with respect to this stock. Right? Not what the financials say, not what the fundamental performance of that company say, but what is the market sentiment? What are other buyers and sellers doing and how are they treating this stock? Gotcha. Right. I'm riding that wave.
So I'm hearing these terms from you, technical and fundamental. Is it the same thing as saying short-term investor and long-term investor? Or are those different things also?
They're correlated. So I would say that a fundamental investor tends to be much more long-term in their investment horizon than a technical investor. Okay. Yeah, I think you can draw that correlation for sure. Cool. Yeah. A technical investor is not necessarily a short-term investor and a fundamental investor is not necessarily a long-term investor, but they're correlated for sure.
Right. Okay.
But just gonna get back to you can get so deep into each one of these areas, like I was saying while we were off camera, right? But fundamental is about, I'm going to project what the future cash flow of this company is, and then determine how much I'm willing to buy those future cash flows for today. That's ultimately what a fundamental investor is doing.
Okay.
And they do that by way of what's called a discounted cash flow model. We'll probably save that for another time, like getting into the details of that. But just understand that that's what a fundamental investor is doing to determine whether the price that I'm buying this company for today, it's trading at $40 a share today, is that a good price?
Gotcha.
Right. I'm going to do that analysis to determine whether $40 per share is a good price. If I do my analysis and it says $50 per share, but it's trading for $40 per share, then that's a good buy, because I'm buying below what I believe the company is worth.
Correct.
Right.
If the market value is $80 per share today and my underlying discounted cash flow model tells me $50 per share, then it's overvalued and I don't want to buy that today.
You don't want to buy that today.
That's ultimately what's happening on a fundamental side. On the technical side, I am looking at price movement and I'm trying to assess how the market is reacting to this stock. It's about market sentiment. And in a lot of situations, look at like a GameStop. What was happening with GameStop was much more technical than it was fundamental. There was no underlying fundamental valuation.
I feel like from what you've been saying today, you're more of a fundamentalist.
I'm hugely a fundamentalist, which tends to be less sexy.
Right, but the same thing. You as a fundamentalist stuff stood back on the GameStop and just on the sideline, like no.
This isn't my play.
But the possible day traders and the other technical people and stuff, they're like, I want in.
Yeah. But you also had a crowd of people who were just like, I want in because everybody else wants in.
Groupies,
right? Not knowing what the
hell's going on.
Doing. So yeah, like you have a few different participants, right?
Let me ask you now. I always say this on the show and stuff. You have the have and the have-nots. The haves, we'll say they're not even the 1%. We'll say they're the 10%ers, right? How come the haves don't try to help and educate the have-nots to prevent the have-nots coming to try and take from the haves? Because it's kind of like, you live in a slap-ass mansion across the way. I'm over here in this shack with like me and my 8 kids.
Right.
What the hell stopping me from running up in your spot, whatever, because you're not giving us the know-how or the teachings or the blessings to kind of not come run up on you?
So, it's a good question, right? And I don't think that they're thinking that far out, right? Like they're looking right in front of them and they're trying to protect what it is that they have right in front of them.
For themselves.
There's winners and there's losers. So on every trade, there is a winner and there is a loser. There's somebody who bought something that has a lot of value. There's somebody who sold it and probably didn't know the value that what they just sold had. Right. And so if I would say that some people may feel that if I empower everybody to kind of have equal information to me, maybe there's less opportunities for me to take advantage of, because the markets are much more efficient and everybody is privy to the same information. I may not find the diamond in the rough opportunity because this guy doesn't know what he has. Right, and so I'm trying to protect my domain and my world that I understand, because if you don't understand it, that's one more opportunity for you to take something.
Yeah.
So I see this all the time, right? Like in the ends where I'm from, you got like on the real estate side, you got door knockers that'll knock on a door and be like, "Hey man, nice house. I'll offer you $500,000 for your house right now."
Right. Yeah.
And that may change a family's life in the ends, right? It's like $500.
Right.
Where do I sign?
Yeah.
Right.
But, maybe a developer has come to you and understands like, I have zoning to create a shopping plaza, the next Yorkdale here, right? I will pay $500,000 for it, knowing that it's actually worth $13 million. Right?
I don't see why not.
If I go to you and I say, hey man, let me tell you, this property right here is worth $13 million. That's one less opportunity for me to like.
Facts.
Right.
Facts. When you can snatch it for such a cheaper price and stuff, whatever, and everything like that.
And you feel like you're happy because you're none the wiser, right?
Right.
$500 changed my life. I'm out. And so I think there's a lot of that's going on in the market.
Do you think a lot of people have access to financial literacy to shrink that gap between the haves and the have-nots? Do you think like in the world we live in with like public information, internet, conversations like this, podcasts, because there's tons of financial podcasts out there, and then there's tons of situations where a person might know a money person, like such as yourself.
Yeah.
And then might get the little Q&A
Get the
moments
Q&As,
and stuff
right.
like that, or just rub shoulders like, hey,
Yeah.
hit me onto some things.
Yeah, sure.
Help change my life.
Right. No, it's more accessible and it's better than it's ever been. Right.
Nice.
And like, because society is democratizing more and more every day, right? Like access to information is much more readily available for people than it was 10 years ago.
Yeah.
With the
Right.
internet and with access to people and social media, I can ask this person. So I think it's definitely moving and trending in the right direction. But there still is a school of people that are hugging their power.
Yeah.
You know what I mean? Are like,
Which I mean, if they're playing the game, it's like Monopoly, right? Like you're playing the game to win. You're not gonna educate the next person who's playing the game also.
and
Where does the moral kick in though? Where's the moral and principle kick in though?
But how many people in this world operate on moral and principles?
My bad. I
It's the world
apologize.
we live in, right?
I think once more people start to realize, like especially people from our community start to realize that like if we do work together, because that's how a lot of communities, kind of step themselves out and
Yes.
out of poverty. It does require some working together.
Yeah.
Right.
Right.
So you can't just clutch what you got and
Right,
hold it to
right.
yourself. You do have to work with people to get there.
Right.
So we need more. We need more of that at the very least.
Because I remember I had an OG and stuff that the family knows.
Yeah.
And my man came to me. I think I was talking about money with someone else, and he said, "Oh, you have a little knowledge." So I said, "Yeah." And then he explained to what company, a specific bank he works for, what he does, and everything like that.
Right.
I'm like, help a young man. I was young. I was under than 30. I'm like,
Yeah.
help me so I can
yeah.
help others,
Yeah.
so we could be good. And the man's like, why is like throwing pearls to swine? I'm like, we're gonna be in this rat race forever, and they're gonna come to the position where they're gonna come and want to take what you got.
Yeah. No, I mean, I like I said, I think the information is out there, but sometimes you don't know the question to ask, right?
Yeah.
And that's what I think people can help you with. So even like a podcast like this, I was just saying like it goes so deep, and you're not gonna cover everything. Right. But at the very least, if there's something that caught your attention, like you can go down that rabbit hole
On your own,
Right, and
until
it's
you
out there.
to develop the question.
till you develop the question. It's like I heard something that piqued my interest. Let me go down that rabbit hole a bit. Let me start to flesh that out. I'm gonna come out with even more questions, but I can continue to ask and kind of throw it out into the universe and get those answers. So it's better than it's ever been. I think for me, one thing that really helped me was because again, my first foray into finance was my education, right? So I kind of studied finance and then got into finance for myself and whatnot. And that was helpful. So, I hear a lot of people that ask me like, yo, how much did your schooling help? And it did. Like it exposed me to a world that I had no
idea
access to before.
Okay, yeah.
Correct.
Coming from where we come from.
Right. Yeah.
Right.
Yeah.
So that was big. And the fact of the matter is, like, even for myself, like I kind of stumbled into it. When I started in university, I was kind of like an undecided major for the first few months.
Okay.
And I remember seeing the Rotman School on campus, and the kids were dressed sharp and they were in business suits. And I was kind of like, that looks kind of dope.
Yeah.
And started to like kind of, inch towards finance, and then ended up, getting into that program, and kind of that was it for me.
Right.
But again, it starts with examples, and I think one thing that was helpful for me was actually getting some access to it, right? Like seeing it. But yeah, we need much more of that, where I come from anyway, right? Like you just don't know what you don't know.
It's funny because I remember the first stock that I bought, and it was a friend of mine who's like, yeah, man, I just heard this thing over I don't know what he was listening to, and it was that group, the Motley Fool.
Yeah.
He's like, yeah, I mean, you pay a certain amount and then they tell you what to invest in and so forth like that. And it's like, I always wanted to get into stock, but I never had the knowledge, right? So it's like, yeah, they're talking about this one stock. So I think the stock they were talking about was the NXPI, which they were doing all the technology for the like the credit cards, the chip, and the phones. So all the swipe, it does that, the transaction stuff like that. They were involved in that.
Okay,
right?
sure.
So it's like, yeah, it's gonna be big. That's where everything's going. I was like, yeah, that's cool, and so forth like that. So I ended up investing in that, not really knowing what the game is, how the game is played, right?
Right.
So it's like, I think I got in around, I want to say maybe $17.95 a share was when I got in, or maybe it might have been a little bit higher than that, right? But then, as soon as I got in, the price just started going down. I'm like, shit.
Abort.
I'm losing money. Like, I'm losing money. I'm like, man, I'm like, maybe I shouldn't be playing this right away without understanding what's going on, right? So I said to wifey, I said, you know what? As soon as it gets back to close to what we paid for it, I'm just gonna sell it.
Exit.
Right?
Yeah.
So that's what we did. As soon as it got close to where it was, we sold.
Yeah.
Right. Almost a year later. So let's say I bought it at 20.
Yeah.
Right?
Yeah.
It went down to 17. I think it got as low as like 16. I'm like, man, as soon as it goes back to 20, I'm out. I went back to 20. I sold the stock and went out. Never paid attention to it, this, that, and the third, and so forth like that. Probably about a year later, I went back and said, let me look at this stock. When I went back, thing was at $100 a share.
Yeah.
And I was saying to myself, damn, not being educated.
Yeah.
Not being educated.
Yeah.
I missed out.
Yeah.
Right? Not understanding. A lot of times when the money goes out, it's just a company investing the money in other things. Which, as a company growing, that's what they need to do.
Right.
So there's that in of itself is the trap that a lot of people find themselves in, right? So, like, we were talking about buying low and selling high, right?
Right.
That's what I was just about to say.
But we, like, in that scenario, it's you bought high and you sold low.
Yes.
Right? Which is the opposite of what the game that you should be playing, right? You're buying low and you're selling high. If you're not doing like that short position that we were talking about earlier, right?
Right.
So a lot of people see that price movement and they get scared out of a stock, right? So it's like, I'm out.
Yeah.
I'm out. But that's contrary to the game that you should be playing if you're buying low and selling high. But it does start with understanding what you're buying and whether that price that you paid, as a fundamental investor, is it worth $20, right?
Right.
If it went to 17 and it was worth $20, right, from my fundamental analysis, I'm buying some more.
Right.
Right? Like, I'm increasing my position.
Right.
I'm not selling. I'm saying, I'm saying it's a sale.
Yes.
On
It's a sale.
Yes.
Scoop.
Yes.
Right? Drops to 10. I'm saying, yo, buy more, right?
Right.
But it always starts with what is it fundamentally worth, right? And that's the piece that was missing in that equation, right? It was that $20 that you bought it for.
Yeah.
Did you do that assessment to say, yo, you know what? $20 is actually a good price to buy it at.
Right.
Right? If it dropped to 17, that's an even better price to buy it at. I'm going to cop some more, right? So that's where kind of doing that fundamental analysis and that due diligence comes. There's a lot of good companies. Like, Amazon's a great company.
Yeah.
It's a great company.
Right.
Yeah. Is the price that it's currently trading at worth it, though?
Yeah, Amazon, that's too rich for my blood.
But that's it. You have to ask yourself, what is a fair price to pay
for Amazon?
Right. I look at Tesla. Tesla as a company is an amazing company with huge potential and huge growth opportunity.
Absolutely.
Right.
Is the price that it's trading at right now worth it?
Yeah.
Right? Tesla's going to be around. Amazon's going to be around. Like, the stock price, I think people sometimes misinterpret that the stock price. The stock price is just a function of buyers and sellers of something. Mm-hmm. If a lot of people want it, price is going to go up. If people don't want it, the price is going to go down.
Right.
All of that has nothing to do with how the company is actually doing. Right? Okay. So when you look at that company now and you kind of look at it from a fundamental perspective, you can arrive at, you know what? Amazon is worth $30 a share, $3,000 a share.
Right.
Right? Maybe it's worth $4,000 a share. Maybe it's still at a discount, but you have to do that initial price assessment to determine what is a fair price to pay for it.
Gotcha.
Got it.
Because what's happening in the market is not directly tied to the performance of the company itself.
Right. Okay.
How long would you say an average person would take to kind of learn, I want to say, the basics of, like, how long it would take to for initial placement. So let's say if he was to do his thing in January, would you say like come June, he'll have the knowledge to know for a fact it's going to go down and it's going to go up and it'll go up kind of nice? Or would it be a situation where you don't know per stock and you just take the chances of gambling with the money that you're never going to get back?
Yeah, like it's a good question, right? It's Warren Buffett has a quote. I'm going to paraphrase it. It's actually more of a story, right? He talks about the market being like Cinderella at the ball. Oh, right, okay. And dancing in a room, but you're dancing in a room where the clock has no hands, right? So you don't know that it's gonna strike. It's gonna strike midnight at some point in time. The game is gonna come to an end, right? And you got to be out. But you don't know when that's happening because you're enjoying the ball, but the clock has no hands. You don't know when midnight is going to strike, right? And I like that. It just goes to say that you can't time the market, right? You don't know when certain things are going to happen. But what you can do is assess at a given point in time whether you believe there's fundamental value in what it is that you're buying.
Got it. I like that.
Yeah. Right? So like, is there a right time or a wrong time to buy something?
No.
Not necessarily. It's what is it doing right now? Do your assessment and determine whether that price is a fair price to pay for it. Right? And if it is, pick it up. Yeah. And if it goes even lower, pick up more. Right? As long as it fits your thesis. But the other thing is that everybody's thesis is different. So my discounted cash flow analysis and what I project the company to be worth may be different from somebody else's.
Correct.
Right? But if I'm right or wrong, as long as I've done that assessment, I'm okay with the result. That's how I look at it.
Yeah, makes sense.
I dig that.
I see a lot of people buying penny stocks. Yeah. What's that all about? Can you explain the situation there in that?
Yeah, so I don't buy penny stocks personally, again.
Because that would be a fundamentalist thing.
Yeah, it's not really fundamentals.
Hey, I'm getting smarter. I was going to say the same thing. Look at you. Look at you. Well, you know.
So like penny stocks, right? Penny stocks typically trade, so let's look in the Canadian context. Penny stocks typically trade on the venture exchange.
Mm-hmm. Okay.
The venture exchange are new companies, right? Those new companies aren't mature to a point where they are paying dividends, right? So if you're a fundamentalist, it's very difficult for you to assess. Like when you look at their financials, right? The financial statements,
they don't have really that much history.
They don't have any, right?
Right.
There's no track record. There's no track record. Can't determine how profitable you're going to be. It's very speculative.
Got it.
Right? You're buying a storyline. Right? You're buying a storyline
while the story is still being written.
While the story is still being written.
Right.
So it's much more of a crapshoot. Now, the reason why people may have a propensity for penny stocks is somewhat flawed because you think that you're buying something that's really cheap.
Right.
Now, that sentiment is flawed because whether I pay $100 per share or a penny per share, it's the movement in that stock that's going to determine what my return is. So if I buy something for $100 and it increases by 100%, then I've made 100% return on my money.
Right.
If I buy a penny stock and it increases by 10%, then I made 10% on my money.
Right.
Mm-hmm. So, just because you're buying something cheap doesn't necessarily mean that you're going to get a higher return on it.
Right.
So that's one of the misrepresentations that people have about buying penny stock. Now, it is true that very early stage companies that have a lot of growth potential and end up doing well can, blow it out the water as far as their appreciation goes.
Right.
So I think people get caught up in that potential, right?
It's almost like gambling at that point.
It's you're rolling the dice and you're saying you're rolling the dice. You're rolling the dice with those, right? That's not what I do with stock. I don't roll. I don't roll the dice.
You're a fundamentalist.
I'm a fundamentalist.
Right. I'm a bootleg fundamentalist after this podcast because I'm gonna go back and listen to this podcast my damn self.
Yeah. Which isn't sexy, right? Because the majority of people are looking for that. Yo, I bought this at a penny and it went to $100, and it's kind of like, you scratch, do a scratch ticket,
right?
Or play the lotto, right? I'm going to buy Royal Bank. I bought a lot of Royal and I bought a lot of bank stocks in March of 2020.
Okay.
Just because fundamentally the price was at a 30%, 40% discount to my fundamental assessment of what the price should be.
Right.
Okay.
So it was just like, yeah, I'm buying that all day. And RBC and Scotiabank and CIBC aren't the sexiest stock on the, but it's at a 30% discount right now.
It's okay. You don't gotta have the baddest bitch on the block.
You know what I'm saying? I
You
just
gotta
want
have the good woman.
exactly,
Yeah.
exactly.
The
Right.
woman, the woman you're gonna appreciate over time.
So
Fine wine.
So that's kind of how I view stock, and the reason for that is I take a lot of risks in other areas than my stock investing.
Right, because
Right.
you already got your nest egg and stuff with these things.
Well, what it is like there's a number of like entrepreneurial ventures that I'm a part of that are like high risk, right?
Right.
So I'm already parking money in some high risk things.
So this is your stability one right here.
My stock portfolio
Yeah.
is my stable investment portfolio. I don't take a lot of risk there because I'm already rolling the dice with that.
You're capturing elsewhere.
Right.
Exactly.
Okay. Yo, go ahead.
I always hear them say it's good to diversify
Yeah.
your portfolio.
Sure.
What does that mean?
So that means just don't put all your eggs in
one
one
basket.
basket, right?
Okay.
So, if you have $100,000 and you put it in that one penny stock,
Right.
And that penny stock goes south, that's it.
That's it.
The game is over, right? Versus if you take that $100,000 and you put a little bit here and a little bit here, and maybe what you do is you put some stuff in some riskier things, right? It's like 30% of it, I'm going to put in the risky stuff that has huge growth potential,
right?
And the other 70%, I'm going to put in something that's a bit safer, more stable.
Yeah.
That's what diversification is. It's just ensuring that you're not, in any one or few specific things that can go south.
Okay.
You're kind of much more diversified, and you have, much more exposure to a variety of things than any one thing.
Okay.
Nice.
And essentially, like mutual funds would be like
So a mutual fund tries to do that, right? A mutual fund is you're investing in this fund. That fund is made up of a variety of things.
Right.
With the ETF that you're talking about,
right.
Same thing, right? You're investing in a thing, but underlying that thing is many things.
Right.
Right. So you're now exposed to many things rather than one thing. Right. And so the basket of those many things is doing a bunch of things. The ETF is performing based on the full basket. So if one thing is doing poorly but something else is doing well, kind of nets out.
Okay.
Okay.
Got it.
Could you explain Bitcoin for us dummies? I'll be the first leader on the dummy line to tell you.
No,
I'll
be the caboose following it.
Yeah,
right
because
up.
I want to say like one of the Ask the Sons questions and stuff, whatever. One day they were saying like, is there something that you don't fully understand, grasp of? Yeah. I threw my hand up real quick and said Bitcoin. Explain Bitcoin for us, because I feel like with cryptocurrency, it's gonna be here.
Yeah.
But I don't understand the stuff like the dynamics of it, like the basic stuff. So elaborate for the people.
And if you can, I remember I asked you this question.
Yeah.
Is it feasible to get in now, being that it's such a high value?
Sure.
And doesn't make sense to get.
Didn't that thing go to 3,000 one time and it dropped down to like 65?
So, yeah, Bitcoin is volatile.
Okay.
So Bitcoin, there's two sides, like really two conversations to have when you're talking about cryptocurrency. There's the technology, right? And then there's the financial aspect of Bitcoin.
Okay.
The technology front, just to put it as simply as possible, Bitcoin was the first of its kind. It's a digital asset that's traded on what's called that's on a blockchain network. And ultimately, what a blockchain is, it's a distributed ledger that can't be hacked, it can't be manipulated. What it says is the truth at any given point in time.
Got it.
I can dive into the technology more, but if you can accept that fundamental fact that the whole, breakthrough technology for Bitcoin is that what the ledger says is truth, that is what Bitcoin has achieved. Maybe to take it a level, like you just go another level underneath it. Whenever we have settlements, right, in a bank.
Right.
You transfer money to me, right?
Say I'm transferring like $1 million.
You're transferring, yeah, you know what I'm saying? Like, it's a normal day, right? So
Yeah.
you're transferring me $1 million, right?
That's a damn normal day, man.
Yeah, you know what I'm
Hey
saying?
man, mind your business.
Transfer me
Continue.
$1 million, right? In that process, your bank has to, you have to trust your bank, for one,
Right.
that they're going to send me the $1 million.
Right.
Right.
You have to trust your bank that, they've looked at your account and they've actually made that transfer. I have to trust my bank that they received that transfer.
Are these the days where they're holding the funds?
Well,
to kind of verify.
You gotta verify. There's all these settlements and checks that need to be made before
Right.
both parties say, all right, the actual
Well,
funds were transferred.
Is it legit?
They're legit.
Yeah.
Everything is cool. All right, everybody can go your separate ways, right?
Right.
Now, what blockchain technology has achieved is the ability to remove third-party verification. So I don't need to trust anybody that this transaction has taken place.
So as you know, it's concrete that I have $1 million to transfer to
transfer
you.
me $1 million. I received that $1 million on the blockchain. The blockchain cannot be manipulated. Nobody can hack the blockchain and manipulate that transaction in any way. It is what it is.
Oh.
If without diving deeper into like how the technology makes that possible,
Yeah.
right? Because that's a whole
That's a whole
other
different thing. Yeah.
right? Cryptographic hashes and like how that can't be manipulated in any way.
That sounds like
unless
a
you
whole
introduce
hour and a half by itself.
quantum
Yeah.
computing.
And
And then if you have quantum computing, the world is at risk anyway. So why would if we can just accept that the Bitcoin ledger or the blockchain ledger is fact, that helps the conversation.
Okay.
So what blockchain has done is establish that when transactions take place, they are fact. Okay. Now, why that's huge is now you don't need to rely on third-party institutions to verify that these things are happening. I can transact directly with you. Once the Bitcoin that I transfer you is received, you know that it's received. You transfer me Bitcoin, I know that it's received, and we don't have to rely on anybody. Right?
So is it like a coin itself?
It's not. It's actually just it's all digital.
Right.
Right. So it's digital. It's not anything physical that you can hold. It's
No,
not
because
anything
I
physical
seen
that
a
you
few.
touch.
I've seen like when in the downtown vicinity of Toronto.
Yeah.
I seen a lot of machines that say or stores that say Bitcoin machine available.
Yeah.
So I'm like, what do you do with that?
So what you do with that is you can actually buy and sell Bitcoin through those machines.
Oh,
But there's nothing physical in that transaction. So you would like literally log in,
put your
you
bank
buy-
card in, and
right. You can download the Bitcoin to your phone. And when I say phone, I'm talking about a wallet that you're going to hold that Bitcoin in.
Okay.
You could download it to like a Trezor. Like there's different ways that you can hold your Bitcoin. You can hold it on an exchange. You can hold your Bitcoin in different places. But the whole point of the blockchain is that at any given point in time, I can see where that Bitcoin is.
Right.
Right. That's the technology side. I'm happy to come back and like dive into the technology some more.
we would love to have
Yeah,
you.
we'll
love to have you.
because what I'm pretty sure after this, people are gonna have more questions.
Sure.
People gonna stalk you.
Yeah.
I mean, I'm working with a few of those, but it's all good.
It's all good. All right, so
But what I was gonna say though is the other side to the equation is the finance side of
Finance.
Bitcoin.
right.
Right, so there's the technology,
Technology side.
I'm keeping it very simple with the technology because it's just it's a distributed ledger that can't be manipulated. It's fact. We can transact without a third party intervention.
Third party being a bank.
Third party being a bank.
Okay.
Right.
We don't gotta verify shit.
Right.
That's the beautiful thing.
It verifies itself.
It verifies itself, whatever. And that's what high exchange dollars and stuff, whatever, as well, right?
Yeah.
I think that's the beautiful thing.
Yeah.
Because now when you're explaining the stuff like that, yeah, I want to say, even if you deposit like a check for like 10 grand or something like that, banks is like, look, we're going to have to check what's up. We're going to allow
We're gonna
you
have to hold this for a
we're
couple
gonna
of
allow
days.
you this monkey ass amount right here to use.
Yep.
While we go through this and stuff for the
Verification check,
yeah.
just make sure that this is legit.
Yeah, we got to make sure and stuff for the, but like, it's like boom, boom, instant.
Hey, try sending money overseas and see how long and how costly that is. Because now you have, without getting too deep into it, you have, I may be RBC, and then transferring money from RBC to CIBC and through a wire may not be difficult to do, right? But transfer some money overseas. If I'm a bank that doesn't have a relationship with the bank that I'm sending to, I need to now find a bank that I have a relationship with that then has a relationship with the bank that it's being sent to.
Jeez.
Oh, so you need a third party.
You need a third party
third party.
to the third party. And sometimes it gets really, sometimes it's like, well, this bank has a relationship with us, so we'll send it here. That bank has a relationship with that bank that then has a relationship with that bank to get it to where you need to go.
Right.
And so it goes through all of these hands and costs because somebody has to pay to verify and for it to go through that chain to actually get to where it needs to be. Right.
So even like in a sending point like that, you could say you're gonna send $1 million, and because people are eating off their fees and stuff for the transaction, that mill might cut down and stuff.
When it gets to you, it's like, all right, I'm saying I got my 900,000.
Yo,
right. So yeah, like I mean, the system, the traditional banking system is not super efficient.
Right.
Right. There's all of these breaks and gaps that don't make it a super efficient system. With Bitcoin, I can send Bitcoin from here to wherever, without any third party intervention, and it's pretty much instantly available once the blockchain validates that transaction.
Okay.
A lot more to that, but that's the technology. The finance now.
That's what I was gonna say. When we get into the finance piece, that finance piece and that technology piece, I like how the technology piece works when you're saying about the blockchain, but the finance piece and stuff is what's kind of scary.
Sure. Like, how much is Bitcoin worth? Like, is it a good price? Like,
right.
Buy it.
Right.
So a couple of things. One is understanding that a Bitcoin, a single Bitcoin, like people regard a single Bitcoin as, oh, well, I don't have enough to buy a Bitcoin. A Bitcoin right now is probably trading at like, say, $60,000 Canadian or something like that, right?
Ooh.
So,
bruh,
that's one coin.
That's one coin, right? One Bitcoin.
Bruh.
But Bitcoin is divisible into 8 decimal points. So you don't got to buy a full Bitcoin.
Oh.
Right? So the same way that a dollar, like the smallest divisible unit of a dollar would be a penny.
Right.
Right? Mm-hmm. You can hold a divisible unit of a Bitcoin down to 8 decimal points.
Got
right?
it.
So, if you want to hold $300, $400 worth of a fraction of a fraction of a fraction of a Bitcoin, you can do that.
Okay.
Right? You don't need to buy a full unit of a Bitcoin.
Okay.
So that's one thing to kind of highlight that I think people kind of like get scared off the bat because it's like, oh, it's $60,000, I can't afford that.
Right.
Well, buy $300 worth of a unit of a fraction of a Bitcoin.
Right.
Okay, I feel brave. I feel better now.
Because my whole thing is I wouldn't mind getting into the game, but at 60,000, I could never get in. But now that you're saying no, it's not. You don't look at it as 60,000 to buy one Bitcoin, and you look at it as how much money do you have to invest,
right? And
then that money is now saying, okay, you can buy point with this.
Correct.
Got it.
In the same way that a dollar can be, I can have a quarter of a dollar. That's what 25 cents is, right?
Right.
I can have a penny of a dollar. It's just 1% of a whole dollar.
Right.
You can do the same thing with Bitcoin down to 8 decimal points, which is much more divisible than a dollar because the smallest unit of a dollar is a penny.
Right. Yeah.
Right. So that's one. Now, like the underlying value of Bitcoin, this is where it gets kind of controversial because everybody has their own valuation methodology and what a Bitcoin should be worth. Personally, I think at the very minimum, Bitcoin can be worth $500,000 a coin.
Okay.
Mm-hmm. So when you talk about $60,000 a coin, it's a steal.
Yeah.
It's a steal right now.
Yeah.
Right. Yeah. Bitcoin's on sale right now. Right.
Right.
And, and it's, coming off of a time where, like years ago when you could buy a Bitcoin for $10 or $8, right, for a single Bitcoin, those guys have made a lot of money because they paid $8 for a coin and now it's worth 60,000, right?
Right.
There's a lot of people kicking themselves over the years that, treated Bitcoin like it was, like this gamer digital money. It was a novelty, right?
Yeah.
Kind of threw it into the ether, and whatever happens to it. There's like a few like these novel cases where there's the Domino's Pizza example where somebody traded, I think it was like 10,000 Bitcoin at the time for 2 Domino's pizzas.
Yeah.
Right. Imagine they held on to 10,000 Bitcoin.
Yeah.
Right? They traded that 10,000. There's people who have jumped off of buildings, committed suicide because they had 10,000 Bitcoin and traded it for nothing at the time because it was just a novelty.
Right.
There's a case of a guy who had a hard drive with, I want to say it was like a quarter $2 billion worth of Bitcoin on it. And he lost the hard drive.
Oh no.
Ultimately determined that it got thrown out in the trash. And so he's actually gone back to the city and he's like, look, I will give you 25% of the value
when I
find my hard drive in the dump site. He's raised, I can't remember how much money, I think like $50 million from investors who are willing to invest the money necessary to dig up the dump.
Wow.
Right? They will get 50% of the total value of what's on that hard drive, and he will get the other 25%. And he's saying, I will donate the other 25% to the city. Just give me access to the dump to dig up my hard drive, please. Right? And of course, the city has said no because it's a hazard and da-da-da-da-da. And he's like lobbying and trying to like...
Oh, it hurts me to my heart.
Wow. So all that to say, like Bitcoin has kind of... It's gone through these motions of being worthless to being something that is coveted now that people want a part of.
Yeah.
Right.
But the way that I think people view, or somebody like me who has a certain outlook on Bitcoin, consider Bitcoin to be like digital gold. And that's how I arrive at that $500,000 price point for a single Bitcoin.
Right. So that 60 is really a sale.
That $60,000 is cheap. If you believe that Bitcoin can be used as a digital gold. Okay. So I got to explain that a little bit, right? So Bitcoin was initially supposed to be a peer-to-peer cash, right? It was supposed to be something that, you know, I could transfer to you in exchange for goods and services in the way that I use dollars to transact.
Right.
Over time, Bitcoin hasn't been the greatest unit of exchange in that way. It hasn't been great at being a unit as an exchange for, you know, market. And transactions.
Got it.
Because it's highly volatile and you never know what the price of it is today is versus tomorrow. Just doesn't work really good as that type of financial instrument.
Do you think they'll master it in like less than a decade?
So Bitcoin itself is kind of Bitcoin itself. It can't be changed. It can't be altered. It is what it is.
Gotcha.
It can fork into different protocols. That's kind of another conversation for another time. There's something that has kind of forked off the original Bitcoin model called Bitcoin Cash that was trying to get back to the concept of it being a more cash transaction type thing.
Right.
But in any event, the fundamental Bitcoin that we're talking about has functioned much more like a form of digital gold. And when I say digital gold, I refer to it as a store of wealth. So throughout history, we've used bars of gold as a store of wealth.
Correct.
When markets are tanking, when there's a lot of uncertainty,
gold is always king.
People have said flee to gold.
Right.
You know, hold gold.
Right.
And a lot of people tend to think that Bitcoin is a better form of gold than gold in the financial markets.
Right. I guess this is why we're seeing a lot of large companies now
starting to
invest into Bitcoin.
A part of your treasury should be held in gold. A part of your treasury should be held in Bitcoin. Why? It's an uncorrelated asset, so it doesn't tend to perform similar to the market. When the markets are down, the markets are down.
Right.
You know, a lot of stocks tend to be correlated. When the markets aren't doing too well, you see the whole market fall.
Right.
Bitcoin is uncorrelated in that way. It doesn't tend to move along with the market. So you want to hedge your investments with having some of Bitcoin because it doesn't tend to move along with the rest of the market. So that's
Got it.
Two, and gold has done the same thing historically, and that's why people hold some of their wealth in gold.
Right.
One of the reasons why you hold gold is it's a finite resource. So there's only so much gold in the world.
Right.
I think, don't quote me on this, but I think there's about 190,000 tons of gold that have actually been mined and are above ground on Earth right now, right? And that total 190,000 tons of gold is worth, say, $10 trillion, right? If you look at the price of gold times the total amount of gold,
right,
all of the gold above ground right now is worth about $10 trillion, right?
Okay.
And that $10 trillion holds that value because it's kind of been absorbed by the financial markets as this hedge to the markets. It's a place to park your money. It's divisible. So if I want to split a bar of gold, I can melt it down. I can do that.
Whatever.
If I need to move it, it's a physical thing that can be moved from one place to another.
It ain't that light. It's heavy as shit.
Exactly. Which is a good segue, right? Now people are like, you know what? We've historically used this gold as this financial instrument to perform this function because it's divisible and it can be transferred, and because it's finite in its quantity. But we now have Bitcoin, which does all of that much more efficiently.
Without the weight.
I don't have to, like, if I want to transfer my wealth from here to another place, I don't have to board my gold on a plane and take off across the sea, like,
and typically when you
hire people with guns to secure my gold and make sure that nobody steals my gold.
And typically when you buy gold or any type of precious metal, you're doing it by the ounce. So there is a weight tied to it.
Absolutely.
Okay.
Absolutely. So it's kind of been this traditional financial instrument that we've adopted for certain qualities.
Mm-hmm.
But in the digital age, we have a new asset in Bitcoin that satisfies the exact same things that gold does, but better. If I want to transfer it from here, if I want to transfer my whole wealth from here to wherever, I can do that by clicking on my phone, and it's super secure. Nobody can hack it. Nobody can unless you put a gun to my head and I give you my security keys and all that. But I don't need to hire somebody to watch my Bitcoin with guns the same way that I need to hire somebody to watch my gold with guns.
Which is beautiful.
Somebody's going to kick in my door and steal my gold.
Right, which is beautiful because that's the thing. Like a skateboarder to a working Joe will probably still have the same amount of money, like multi-millions. You're none the wiser and stuff if they're going point A to point B with their shit.
Yeah. No idea, right? So for all of those reasons, Bitcoin, because it emulates all of these qualities and factors that gold does, the financial markets are starting to regard it as a new alternative to gold. So rather than storing your wealth in gold, you can store your wealth in Bitcoin. It serves a very similar, has very similar properties and characteristics. Now the price point, why $500,000?
Right.
If you benchmark it to gold and you know that the total value of all gold above ground on Earth is about $10 trillion, the current value of gold, of Bitcoin based on its price today is like 600 billion, right?
Right.
You would need to, the price of Bitcoin would need to increase significantly to get to a point where it's at least similar to the total value of gold. And that's how you arrive at that price point for Bitcoin.
Now you say there's only so much of gold above ground, so it's finite. Does Bitcoin have like some sort of finite to it as well?
Yeah.
Okay.
So there will only ever be 21 million Bitcoin in circulation ever. And Bitcoin has a process where, Bitcoin is mined. I don't know if you guys have heard the term Bitcoin mining.
I've heard that.
I've heard
right?
it.
Yeah.
Right.
And it's called mining because similar to gold, you have to mine gold in order for there to be new gold in circulation.
Correct.
You have to mine Bitcoin for there to be new Bitcoin in circulation. Today, there's probably 17 and a half, maybe closer to 18 million. Don't quote me exactly. 18 million Bitcoin in circulation.
Okay.
But the way that the code is written for Bitcoin, there will only ever be 21 million. Once the 21 millionth Bitcoin has been mined, there's no new Bitcoin. So if you don't have one of those Bitcoin units to yourself, there will never be another. You're
going to have to wait for the next storage thing to come up to be involved in that.
Exactly.
Okay.
And again, it's finite characteristics and the fact that there will only be 21 million and there's 17 and a half, say, just under 18 million today, is the reason why there is this value associated with it, because there will only be so much of it.
Gotcha.
Right. Okay.
Makes
sense.
All right, man. Well, appreciate that.
No, man.
Appreciate that. There's a lot to unpack. We still have more, but another day.
Yeah, man. No doubt, man. No doubt. For sure.
We'll get to the question of the week. We'll run it. And then, yes, people, don't be shy to stalk Carey or stalk us with your questions.
Yeah.
He will be back. You heard him say it himself. All right, let's get to the question of the week. What was the highest waste of money that you do not regret?
Yeah, it's crazy. It's a crazy story, actually. And it hits close to home because it didn't happen that long ago. It was actually it's interesting. I actually lost a friend over bad business dealings, right? And that money is lost, but it's also kind of opened my eyes to
that friend,
to that friend, and also just how you conduct yourself in business going forward.
Explain a little.
So This was, again, somebody super, super close to me, really good friend that was a business partner, that really, kind of showed a different side, and ended up taking advantage of a good number of friends and business partners, right? Wow. Like, I'll kind of leave it at that, but, at first it was really hard to digest, right? Because this is somebody that, you never would have thought would do something like that.
Yeah.
Really difficult to digest. And I don't know if I call it a waste of money because at the time, I didn't think it was a waste of money, but that money is gone.
Right. Yeah.
But
to see the value in a person, that's kind of priceless, though.
How do you put, it's almost like, shoot, better that than something else, than even more.
Than even
right?
more.
Or, if that person was still around into the future, like, oh my God, like what could the impact have been then? Right. So,
True.
So it's one of those things where
certain lessons you can't put a price on.
You can't. It was pricey, but I can't put a price on it. You can't put a
price on it. But
I know what the price was.
You know the price.
I know the price. But it opened up my eyes and the eyes of a lot of other people to what can happen.
Right.
Right. Yeah. So, yeah.
Nice. What about you, Smooth?
I mean, I just bought a drone and I'm loving the shit out of it.
Yo.
I mean,
hey, man.
no
regrets.
But I ain't got no regrets.
Not even one letter. Not even one letter. I mean, like for me, I think it was probably just it was a TV one time. I remember I went to a Best Buy.
Right.
And then like for my old apartment and everything like that, the guys like explained to me where you're going to put the TV and where you're going to be sitting.
Yeah.
Right. So it's probably like smaller than the studio and stuff, whatever. Right. So I'm like, I'm going to be sitting here and it's going to be there. So the man's like, oh, you're going to need like a 32-inch TV. I'm like, you shut up and you're going to take my money, man. I'm like, I came here for a 47 and you're going to let me spend my money for my 47. And the guy, he was trying to warn me. He's like, dude, what are you going to be doing? Are you playing Call of Duty? I'm like, you're damn right me playing Call of Duty.
Right.
All night long.
He's like, 47-inch.
He's like, you might get headaches. Your eyes might hurt. I'm like,
that's for me.
I don't care. Don't tell me how to spend my money because I don't tell you how to spend your money.
Right.
That boy was right. I was all fucked up in the game. My eyes, I turned Asian and stuff within like 2 nights. I had headaches and everything and stuff, whatever. And then my girlfriend at the time, she looked at me, she's like, the guy warned you, didn't you? I'm like, no regrets.
No regrets.
Just pass me the Advil.
Yeah. I'm going to buy a bigger house.
Yeah, that's it. It motivated me to get my hustle on to get a bigger space.
Right.
There you go.
So no further questions.
It's another way to look at it. Yeah, man, no regrets, man. No regrets.
No regrets, man. No regrets. All right, man. Let's get to the Ask the Sons and then slide up out of here. We always give guests first shot for the questions to Ask the Sons. Fire away.
Yeah, nah, man. Again, we all come from a similar community. I've known you for ever. Forever. So I know exactly where we're coming from, right? And the question that I always have is like, what are the 3 major things that you think contribute to our community, kind of falling short of their financial goals and like where other communities have kind of been able to excel and achieve things? Like, what are the 3 major setbacks that we have as a community?
I think one of the big ones is that ideology of an American dream or a Canadian dream. Like you build up to get yourself the big house with the white picket fence, and that's what we call you've made it.
All right. Yeah, back it up.
We've made it from there. The second thing is that you must be able to save and have some sort of savings for that rainy day.
Yeah.
And the third is that you have to be working in order to achieve all of these things. I think that sort of thing has been, for me, it's been passed down from generation to generation. I've been fortunate that my mom was a person that always thought outside of the box. So she became an investor in real estate early. And that was one of the things that she always instilled on all of us, is that get into real estate, get into the real estate market. And because of her doing that, my parents were able to accumulate enough that when they passed, they were able to give their kids, I wouldn't necessarily say a huge start,
Right.
but at least a proper footing.
Yeah.
And I say that because I want to say within the last 5 years or so, I can't tell you how many people I've seen who've passed, and people have to be setting up a GoFundMe page just to bury them.
Yeah.
You know what I mean? That we're not even saying cover whatever debt that they left, because they left debt.
Yeah.
But just the fact that they didn't even have the money to bury them,
Right.
which is, you know what I mean? You look at that and say, wow, that's crazy.
Told you that Chris Rock, when white people die, they leave a will. When black people die, they leave a bill. So I think for me, savings is one. Like, they just tell you to keep saving. And I feel like a lot of times and stuff, whatever, people don't understand that your money can work for you. You don't have to bust your ass for like multiple damn jobs, because I feel like there's tons of people that just go through, I know people and stuff that's working more jobs than me, and they still struggling.
Right.
And that's the thing that always baffles me and stuff. And I'm like, so like the overworking, the saving thing, and the lack of togetherness, because it's kind of like, if all three of us and stuff have an opportunity where, okay, we can't afford the capital to something and stuff, whatever, why not put our egos and pride aside to realize that this is the common goal? We can go from, like, let's say all chip in to break balance and stuff, whatever, for like 10 grand a piece. No, 10 grand together.
Right.
To eventually we'll probably have 100 grand together a piece. Right. But I think it's a pride and ego thing and stuff where it'd be like, well, why Carey gotta be the one and stuff to watch the funds?
Right.
Or why you get the payout and stuff, whatever. Like, at the end, we're all gonna get this 100 grand.
Right.
So I think the lack of togetherness, that's what's always holding our communities and stuff back.
Okay.
Because it's kind of like everybody wants to be the man or the woman.
Right.
So to speak, whatever. But it's just that no one wants to, too many directors and not enough actors.
Yeah.
Right.
Yeah.
That's how I feel for those three.
No, I get you. Okay.
All right. Second question. That was a good question, by the way.
That's a good question.
That's a fire question. Second question comes from OMG Jackie. What's the best drug to have on sex?
I don't know. Nothing but weed, bro.
Nothing but weed?
I don't know. Nothing but weed.
Nothing but weed.
Yeah, but I can't answer that either. I'm not. Haven't really had the opportunity to. I can't even say opportunity. I haven't really gone down that rabbit hole.
Which is a good thing. Birth control and edible. I'm a fan of shooting the club up.
Fair. I mean, that's outside way to.
I mean that.
Some out of the box thinking.
Yeah, I mean, why not? Like, you know, hey. That's what I feel, Jackie. Hey, I'm sorry. All right. Last question comes from Ellie Eyelash. That's fucking creative. What's the thing you overheard and it changed your life?
Overheard.
With me, and the funny thing too, I want to say is right before my son was born, I never forget the day too. It was I was in Yorkdale. I went to the mall and I went to go buy my son like some shoes and stuff, because I'm like, yo, I always seen these foam posits that I would never have. But they, you know, it was like these little cute little baby shoes and everything. This is before he was born, and I just went to go buy him that day and stuff when I seen him. So went to the cash, and there was a older white gentleman there with his son, and I think his son was starting to act a fool. And he G-checked the son right then and there and stuff for that. He's like, he turned to him and said, I don't have to buy you this.
Right.
I don't have to buy you this. My only job and stuff is to make sure you become a decent human being and you help and provide within your community. And I was like, that's a proper parent.
Yeah.
I dig that. So I tapped him just before COVID, of course. I tapped him like, excuse me, sir. I'm like, yeah, I was like, I dig that. I'm like, he's like, that's a parent's number one overall goal. You don't know how the kid, you wish for them the best.
Sure.
Right.
But that's the main thing you need to instill and stuff like that. And that's from his point of view. I'm like, I'm going to take it and run with it. I actually buying these for my future child to be born. And he's like, yeah, you don't have to do it. You have to make sure they come out to be decent people.
Yeah.
And I was like, dope. I eavesdropped the hell out of it, but it was a life lesson well
Sounds right.
Yeah.
taken.
I think for me, it's I mean, we talk about this all the times, but I remember when I first heard it, it really resonated with me and changed my perspective about a whole things, and that's don't expect you from others.
Facts.
Ooh.
Yeah.
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 Yeah. No, I like that. I like that. You know what? Okay. My pops. Man, shoot. I gotta think. I'm probably gonna paraphrase it. It's again one of those Jamaican things that makes its way to you, right? Yeah. It's what's it? Want it, getting to want it, right? Where it's like you, like as a kid, like wanting that feeling of desire, right? Like you want this thing, you want this thing, you want this thing, you want this thing so bad, and then when you get it, it's kind of like nah, right?
Right.
And like you know, reveling in and like you know appreciating that feeling of desire,
Yeah.
and not confusing it with you know being a negative thing, right?
Right.
You know when you kind of like you know you're a kid and you want something so bad and you really want it and you're crying and
Like
you
a
want
pet.
it,
Yeah,
you want
yeah.
it, and then you get it. And it's kind of like, all right, cool, right? Like on to the next, like it doesn't mean anything anymore.
Yeah.
It's those moments when you feel that you really, really want something. It's like enjoy that moment while you're trying to get it. Like you're trying to pursue it.
The journey.
The journey.
The
Right?
journey.
Yeah, that's always stuck with me.
That's
always stuck with me
dope.
since a kid.
Dope.
Okay. We'll hit the people with so say the sons for the week, and then we out of here. So say the sons for the week is control your state of mind before you try to take control of the situation. So say the sons. Yeah, man. I feel like a lot of people, like even with the whole stock market and everything like that, they're not right. Their credit's probably fucked up, just like how you're saying.
Yeah.
And they're in a situation like, no, I need to go do this. No.
no.
Control your state of mind, your situation before you can try to take control of something else.
100%.
Cool? Yes,
Cool.
man. Appreciate you coming
Hey, man,
through.
no doubt.
Appreciate
Thank you,
that.
Escoffery from
I
the
appreciate
Escoffery
you, my
Group.
brother. I
We'll
appreciate
make sure
you.
we have all the links to his IG page.
Yeah, man. Tell the people where to find you, man.
Yeah.
Hey, man, C-Suite on Instagram. I'm pretty low key. Nothing too crazy happening there, but feel free to drop a line.
Will do.
And if you love this, because I'm pretty sure, listen, man, this is just a beginning of education for me. I'm trying to be more financial literate, not only for myself, but for my kids, because we see others, groups pass down this knowledge. We know of people who are in generational wealth that might be 2, 3, 4 generations in deep.
Yeah. No,
And this is where we need to be. I mean, one of the things that we talk about, what you mentioned, is that as a group, we never get together and discuss this.
Yeah.
And we're always looking at all the other groups. I mean, listen, when the East Indians go to the mosque, it's not always about the holy things. They're sitting down and they're discussing.
Mapping it
they're
out.
they're discussing this amongst
money, let's
themselves.
talk about it. Yeah, they talk
Right?
about these things.
They gather themselves together and they build temples. They build strip malls. They build all these things, and then the wealth comes back into the community. So the more of us know, the more of us all together we grow.
Facts. Once again, folks, thank you for listening to the Podical Sons. Remember, the difference between genius and stupidity is that genius has its limits. Peace and love, y'all. Be safe out there. Appreciate you, my brother, for blessing the peoples. Peace.
Peace.
The Podical Sons with Not Your Average Joseph and Sofa King Marvelous.